견고했던 달러 중심의 질서, 지금 거대한 도전에 직면했습니다. 환율과 자본은 외교와 안보의 무기가 되었고 글로벌 통화 체제에도 균열이 시작됐습니다. 위안화의 부상, CBDC의 확산, 그리고 스테이블코인. 누가 새로운 돈의 질서를 지배할 것인가? 글로벌 금융위기를 간파한 거시경제학자 카르멘 라인하트. 통화 질서와 한국 경제를 연결하는 김진일. 디지털화폐와 비트코인의 미래를 말하는 사이페딘 아모스. 디지털 자산과 금융혁신을 탐구하는 강영구. 새 질서의 태동, 전환의 중심에서 2026 세계 경제금융 컨퍼런스가 국제 통화 질서의 미래를 묻습니다. 지금은 전략과 선택의 순간입니다.
네. 한국경제TV가 주최하는 2026 세계 경제금융 컨퍼런스에 참석해 주신 모든 내외 귀빈 여러분 진심으로 환영합니다. 안녕하십니까? 저는 오늘 행사 진행을 맡게 된 한국경제TV 앵커 이혜수입니다. 반갑습니다. Good morning, ladies and gentlemen. Welcome to the 2026 Global Financial Conference hosted by Korea Economic TV. And my name is Hae-Soo Lee, an anchor at Korea Economic Television, and it is such an honor to be a great for your host in a second year. 지금 우리는 달러 중심 체제의 변화, 그리고 위안화 국제화의 확산, 또 디지털 자산과 중앙은행 디지털 화폐의 등장이라는 거대한 전환의 한가운데 서 있습니다. 여기에 지정학적 리스크와 기술 혁신까지 더해지며 글로벌 금융의 질서는 빠르게 재편되고 있는데요. 오늘 이 자리에서는 이러한 급변하는 대외적인 매크로 환경 속에서 새로운 금융의 방향과 기회를 함께 모색해 보고자 합니다. 참석하신 모든 분들께서 유익하고 의미 있는 시간이 되시기를 바라보겠습니다. 그럼 지금부터 2026 세계 경제금융 컨퍼런스를 시작하겠습니다. (2026) 세계 경제금융 컨퍼런스를 축하해 주시기 위해 정말 많은 내외 귀빈분들께서 자리를 빛내주셨습니다. 귀한 시간 내주신 점 다시 한번 감사 인사드리고요. 먼저 본 행사의 주최 기관장이신 한국경제TV 정종태 대표이사님의 환영사가 있겠습니다. 정종태 대표이사님을 무대 위로 모시겠습니다. 여러분 큰 박수 부탁드립니다.
안녕하십니까. 정말 많이 오셨습니다. 반갑습니다. 한국경제TV 대표 정종태입니다. 바쁘신 일정에도 불구하고 2026 세계경제금융 컨퍼런스에 참석해 주신 우리 윤한홍 국회 정무위원장님, 그리고 금융 및 산업계 귀빈 여러분께 정말 감사 인사를 드립니다. 오랫동안 국제무역과 금융 시스템의 중심에 서 있었던 달러의 지배적 지위는 심각한 도전을 맞고 있습니다. 트럼프 행정부 재출범 후 미중 무역 갈등이 통화 패권 경쟁으로 확대되면서 위안화 국제화 전략이 본격화됐고 80년 달러 패권도 흔들리고 있습니다. 여기에 각국 중앙은행이 금 매입 움직임에 나서고 있고 디지털 화폐 실험을 하고 있고, 더 나아가 제도권으로 편입되고 있는 스테이블코인의 확산으로 글로벌 금융질서는 빠르게 재편되고 있습니다. 올해 세계 경제 금융 컨퍼런스의 주제를 달러, 위안화, 코인, 글로벌 금융시장 재편으로 정한 이유도 바로 여기에 있습니다. 통화 시스템의 대전환 시대, 한국 경제와 금융산업이 어떻게 새로운 기회를 만들고 이를 어떻게 활용할 수 있을지에 대한 해답을 찾고자 합니다. 오늘 우리는 귀한 두 분을 이 자리에 모셨습니다. Today we will have two distinguished guests, Professor Carmen Reinhardt and Dr. Saifeddin Amos. We are deeply honored to welcome and thank you for having with us. 카르멘 라인하트 교수님은 세계은행 숙부총재를 역임했고 지금은 하버드 케네디 스쿨에서 후학을 양성하고 계십니다. 금융위기의 역사적 패턴을 분석한 명저이죠. 이번엔 다르다. This time is different. 이 책의 공동 저자이셨고 세계 최고의 경제학자라는 수식어가 부족할 정도로 글로벌 석학이십니다. 오늘 기조연설에서는 달러와 위안화의 패권 경쟁을 장기적, 거시적 관점에서 조망하고 가상자산의 부상이 기존 국제통화 질서에 어떤 영향을 미칠지에 대한 통찰력 있는 강연을 해주실 예정입니다. 그리고 대담자로 우리 김진일 교로대 경제학과 교수님을 모셨습니다. 김 교수님은 다 아시겠지만 우리 미국 중앙은행 패드 출신이시죠. 오랫동안 근무한 실무 경험을 바탕으로 거시경제와 통화정책 분야에서 독보적인 연구 성과를 인정받는 경제학자이십니다. 곧이어 열리는 두 번째 세션의 주제는 디지털 화폐의 부상입니다. 현대 비트코인 철학을 정립한 세계적 경제학자 사이페딘 아모스 박사님과 강형구 한양대 교수님께서 디지털 화폐의 부상이 가져올 미래 화폐 시스템의 변화를 전망하고 우리는 무엇을 준비해야 하는지에 대한 깊이 있는 해안을 제시합니다. 2009년 시작한 세계 경제 금융 컨퍼런스는 올해로 18회를 맞습니다. 한국경제TV는 앞으로 세계 경제의 불확실성 속에서 실질적인 해법을 함께 찾고 미래를 대비하는 논의의 장을 꾸준히 마련해 가겠습니다. 오늘 참석하신 모든 분들이 글로벌 금융질서의 변화에 필요한 통찰과 정보, 지식을 얻어가시는 뜻깊은 시간이 되시기를 빕니다. 감사합니다.
네, 정종태 대표 이사님의 환영사를 들어보았습니다. 감사합니다, 대표님. 이어서 오늘 귀한 축사를 전해주실 분을 또 소개해드리겠습니다. 국회 정무위원회를 이끌며 대한민국 금융, 경제정책의 방향을 고민하고 계신 윤한홍 위원장.
윤한홍 정무위원장입니다. 먼저 우리 한국경제TV가 주최하는 경제금융 컨퍼런스 정말 먼저 축하드립니다. 그리고 오늘 이렇게 많은 반가운 분들이 또 함께 해주셨는데요. 유명한 해외 전문가도 오셨고 또 국내 우리 전문가 함께 하고 계신데 오늘 유익한 토론회가 되면서 좋은 내용이 도출될 수 있기를 기대합니다. 먼저 우리 한국경제TV 가족 여러분, 또 우리 정종태 대표님, 평소에도 경제금융 분야에 예리한 지적도 해주시고 또 우리가 받아들여야 되는 많은 대안도 제시해주고 계신데 오늘 또 이렇게 달러 중심의 국제 통화 질서에 대해서 깊이 있는 토론과 또 대응 전략을 마련해 주시겠다고 하니 정말 시적절하고 또 고마운 일이 아닌가 그렇게 생각을 합니다. 아마 그래서 여기 우리 국내 또 각 금융기관의 전문가분들 또 다 함께 오늘 아침에 이렇게 자리하신 것 같습니다. 저희들이 아마추어들이 피부로 느끼기에도 달러 중심의 국제 통화 질서가 어떤 변화에 직면해 있는 거 아닌가 하는 그런 것을 느끼고 있습니다. 더군다나 이번에 또 미국과 이란의 전쟁을 통해서 페트로달러 체계에도 미세한 균열이 생기지 않는가. 더군다나 이제 여러분들 기대하고 있지만은 디지털 화폐, 가상자산이 각종 결제 시스템에 들어오고 있고 또 위안화가 국제 결제망에 상당히 도전적으로 들어오고 있는 상황이기 때문에 오늘 국제 달러 중심의 국제 통화 질서에 대해서 이렇게 논의를 하고 또 선제적으로 어떤 방안을 제시하는 것은 굉장히 꼭 필요한 일이다 그런 생각을 합니다. 그래서 오늘 많은 분이 오신 것 같은데 더군다나 또 우리 대한민국이 대외 의존도가 굉장히 높지 않습니까? 그러니까 조금만 국제 금융 질서가 변화가 있어도 나라에 큰 충격이 있기 때문에 선제적으로 잘 해주시길 부탁드리고 또 여러분들이 제시하는 이런 안들이 우리 국회에도 전달되어서 입법 활동에도 많이 반영될 수 있도록 그렇게 애를 쓰겠습니다. 다시 한번 이런 좋은 토론회를 마련해 주신 우리 정종태 대표님 이하 한경 가족 여러분께도 한국경제TV 가족 여러분께도 감사하다는 말씀을 드리면서 유익한 토론 되시고 모두 건강하시기 바랍니다. 다시 한번 축하드립니다. 고맙습니다.
축사자분 바로 소개해드리도록 하겠습니다. 바쁘신 일정으로 인해 부득이하게 현장에는 함께하시지 못하셨지만 영상으로 또 귀한 말씀을 전해주신 분을 소개해드리겠습니다. 대한민국 경제 정책을 총괄하며 급변하는 글로벌 경제 환경 속에서 우리 경제의 방향을 이끌고 계신 구윤철 부총리 겸 재정경제부 장관님의 영상 축사가 있겠습니다.
안녕하십니까. 부총리 겸 재정경제부 장관 구윤철입니다. 2026년 세계 경제 금융 컨퍼런스 개최를 진심으로 축하드립니다. 오늘 뜻깊은 자리를 마련해 주신 정종태 한국경제TV 대표이사님, 바쁘신 일정 중에도 함께해 주신 윤한홍 정무위원장님, 그리고 내외 기빈 여러분께도 반가운 인사를 올립니다. 이제 디지털 자산은 단순한 금융 혁신을 넘어 직업 결제의 패러다임을 바꾸며 글로벌 금융 질서 재편의 새로운 동력이 되고 있습니다. 민간이 발행한 디지털 자산이 국경 간 결제와 송금 수단으로 빠르게 확산하고 있으며 블록체인 기반 거래가 실물 경제에도 점차 영향력을 확대하고 있습니다. 디지털 자산의 등장은 금융 효율성을 높이는 기회이기도 하지만 내재적 리스크, 자금 세탁, 외환 규제, 회피 등 금융의 안정성 측면에서 새로운 도전 과제를 던져주기도 합니다. 이재명 정부는 신뢰할 수 있는 규칙 하에 혁신을 촉진해 나갈 수 있도록 시장 인프라 구축과 제도 정비를 일관되게 추진해 오고 있습니다. 디지털 자산의 산업 발전은 물론 이용자 보호와 건전한 시장 질서 확립을 아우르는 디지털 자산 기본 법안의 조속한 입법을 지원하겠습니다. 이와 함께 디지털 자산 현물 ETF 도입과 법인의 디지털 자산 시장 참여에 대해서도 능동적으로 논의해 나가겠습니다. 디지털 화폐 시스템을 활용한 국고금 집행 인프라도 단계적으로 구축해 나가고 있습니다. 불법 외환 거래에 악용하는 것을 방지하기 위해 디지털 자산의 국경 간 거래에 대한 모니터링 체계를 구축하는 한편 디지털 자산 기본 법안과 연계해서 국경 간 스테이블코인 거래에 대한 규율 방안도 마련하겠습니다. 또한 국제사회와 긴밀히 협력하여 포용적이고 지속 가능한 글로벌 금융 질서에 기여할 수 있도록 노력하겠습니다. 오늘 이 자리가 급변하는 글로벌 디지털 금융 환경을 진단하고 대한민국이 나아갈 방향에 대해 지혜를 모으는 소중한 자리가 되기를 바랍니다. 2026년 세계 금융 경제 컨퍼런스의 성공적인 개최를 다시 한번 축하드립니다. 감사합니다.
네, 귀한 말씀 보내주신 구윤철 부총리 겸 재정경제부 장관님께 감사 인사 말씀 다시 드리겠습니다. 자, 본격적으로 행사를 그렇다면 시작해 보도록 하겠습니다. 글로벌 금융위기와 국가부채 그리고 통화 시스템에 대한 깊이 있는 연구로 세계 경제학계와 정책 현장에서 지대한 영향을 미쳐오신 분을 좀 저희가 모셨는데요. 하버드대 석좌 교수이자 또 세계은행 수석 부총재를 역임하며 국제금융질서와 거시경제 정책 분야에서 독보적인 통찰을 제시해 오신 카르멘 라인하트 교수님께서 달러 위안화 패권 경쟁과 디지털 화폐의 부상이라는 주제로 기조 연설을 해주시겠습니다. 그렇다면 카르멘 라인하트 교수님을 무대 위로 모셔보겠습니다.
Okay. Well, good morning, everyone. It's a pleasure once again for me to visit Korea. I've been doing this for a very, very long time, and it's always been a pleasure, and the professionalism here is always a big drawback for me, always pulling me in. So what I'm going to talk about today, as you all know, is a question that I've recurringly, and many others, I am sure, recurringly ask themselves. Just last week, I was giving a keynote at the IMF World Bank at spring meetings in Washington, D.C. Same topic because, of course, there are renewed concerns whether the dollar is losing its position as a global reserve currency, as a hegemon. So here, I'm not going to repeat or read my slide. This is the outline of what I plan to speak on. I will be fairly quick on some of the topics because I hope we can retake them during my conversation with Janil. I call him Janil because I've known him for a very long time, after this presentation. So let me start with a preamble, which is very important. And central banks, investors, do not hold dollars. They do not hold euros. They do not hold renminbi. They hold assets. They hold dollar assets, which means treasuries. It means equity. It does. So this is an issue that we will come back to because we're going to review what is the global demand for dollar assets. That's sort of a centerpiece of answering the question, is the dollar losing ground? The other point I'd like to make in my preamble is that, you know, there is a lot of headlines about connected to the loss of reserve status, that central banks have diversified away from dollar assets. We're going to address that. But let me say that today, in the modern era, looking at central bank balance sheets to know what official purchases of assets is not enough. The sovereign wealth funds have very large and very opaque balance sheets. Finally, you know, on asset classes, we have a new family, right? We have stable coins, we have crypto, we have, or are planning CDBCs. Only 3 countries have adopted CDBCs so far. But this is part of, you know, the financial evolution we've been seeing going on forever. I think those asset classes are here to stay. But you know, I will go back to that. So the current narrative is especially before the Iran war, the current narrative was the debasement trade. That you want to get out of dollars, you want to get out of fiat money in general and more into gold, and you know, things are not looking good On the debt front, things are not looking good. On the monetary front, everyone is concerned about whether more inflation is in the pipeline, and so on. So it was basically any way you can move away from fiat money and the dollar in particular. All the reasons why one is concerned are quite legitimate. So I'm not debating the merits of the debasement trade, but I think a big point that I want to leave with you is do not equate short-run fluctuations in the dollar with the loss of reserve status. They're different animals. The dollar has had in the past not periods of weakness, it's had periods of crashes. It crashed in the 1970s, and very quickly, 2025 was a great year for gold. It was the fifth biggest increase since 1900. But guess what? Does that really mean that the dollar's on the way out? Well, it had even bigger increases, multiple increases in the 1970s. The dollar did very poorly in the 70s. It was believed at that time that the yen or the Deutschmark would take over. But again, do not confuse short-run weakness with the long-term trend, which is what I'm going to talk about. Importantly, what are the markers of a reserve currency? Well, I've already mentioned that if you want to track what is happening in this space, you look not only at central bank balance sheets and how they hold their reserves. You have to look at what countries are doing in terms of their monetary anchor. Korea is a very dollar-centric in that respect. And you see that in intervention strategies by the Bank of Korea, and that is true for many countries. So you start out with looking at the role of a particular currency. Is monetary and exchange rate policy more geared towards the dollar, more geared towards the euro? And so that is one marker. Another marker, of course, is what currency are countries denominating their debts in? What is trade invoicing? What countries are, what currencies is trade denominated in? We're going to go through these markers, but importantly, we have to look at global demand for not just the narrow riskless asset, i.e. treasuries, but more broadly for dollar assets in general. And importantly, official and private sectors care a lot about, number one, currency convertibility, which means, in the words of a professor, MIT professor now deceased that I admired greatly, Rudy Dornbush, when you find a currency desirable, it's like going to a party, that you go to a party because you can leave whenever you want to. And that is the role played by currency convertibility, that you can sell whenever you want to. Also, liquidity. Deep markets are important for reserve currency. So what do the data reveal? And this is not, so what I'm giving you here is my best interpretation of the data that's out there. What about the first thing that I put on the list? What does the global panorama tell us about which currencies are playing a big role as a monetary anchor in exchange rate and monetary policy? Well, this is based on long-dated studies that I have done with Ken Rogoff and Ethan Ilsetsky. This is the distribution. It's really about the dollar and about the euro. Thus far, it has not become evident that at this stage any country is anchoring its monetary or exchange rate policy to any other currency. There are a lot of countries also where you have banks receiving foreign currency deposits. Dollarization is deep, and entrenched. This list, you have the PowerPoint. So I'm just going through it quickly. What it highlights is that when you look at highly dollarized or euroized economies, the dollar is still by far the dominant domestic currency used as well. What about treasuries, the demand for dollar assets? There's no question the global demand for treasuries, whether you look at it as a share of US GDP or as a share of total treasuries, it's gone down. It peaked around 2014, it peaked in 2014 and has declined since. All these data that I'm going to show you are from the flow of funds published by the Federal Reserve. It's the most authoritative data for the post-war financial history of the U.S. Is this cause for concern? Absolutely. The U.S. is issuing a lot of debt. And the rest of the world's appetite for U.S. dollar debt hasn't quite lived up to the amount that's being issued. However, if you look at the distribution of central bank holdings of reserves, yes, the dollar share has gone down, but it's very modest. And I would note that for many of you who are, as in the title suggests, are thinking about has the renminbi or the yuan made inroads, that is the red share here, and it's still very, very, very small, very small. Where the big bang comes for the dollar in recent years, I said it's not a demand for dollars per se, but a demand for dollar assets is in the equities. And what this shows is rest of the world holdings of U.S. corporate equity. And this is at an all-time peak. And Korea has a lot to do with that, right? Inflows of Korean residents into the U.S. equity market are, I'm sure, very well known to you. But this is what the aggregate data shows. So is the dollar out? Well, if you take a look at asset holdings in terms of not treasury securities, but equity, it's at an all-time peak. And in effect, just to preempt the question, if you look at total financial assets, which includes treasuries, it includes equity, it includes foreign reserve, Federal Reserve foreign RPs, it includes corporate bonds, the demand for dollar assets is, as you see, at a post-war peak. So you can guess where I'm going with this. Now, many of you, understandably, I've done a lot of work on China and China's overseas lending. We read a lot about the Belt and Road Initiative. We read a lot about the very large footprint of Chinese lending overseas. And you see this chart, which is taken from work that I've done with Sebastian Horn and Christoph Trebisch, and indeed you see that debt owed to China is now bigger for developing countries than debt to the entire Paris Club, which includes the US, France, UK, Germany, and so on. However, does that mean, well, is this going to create a demand for renminbi or yuan to repay this debt? Well, no, because the majority of Chinese overseas debt is denominated in dollars. This figure comes from the World Bank, and it shows the total amount of external debt and the share of that total debt that is denominated in dollars. And here's another one where since 1970, it's at an all-time peak. Okay, so where am I going with this? I hope you see the pattern that, we certainly see the fraying of demand for treasuries. We certainly have a lot of concerns about the way the U.S. is heading, and I'm going to talk about that imminently. But in terms of the markers that are followed historically, that are indicative of the standing of a reserve currency, we don't see the cracks yet. Invoicing, this is trade invoicing. This comes from the work of Gita Gopinath and others. Gita was a former IMF colleague at Harvard and former IMF chief economist and first deputy managing director. This work is on currency invoicing, trade invoicing. China's trade footprint is enormous, but it is still, notwithstanding recent increases, which you will see in the next slide, what this chart is showing is what share of global trade is invoiced in that currency. The US and the euro are pretty much tied. That's the first panel. Okay, so the first panel shows you that there's pretty close in terms of trade invoicing between dollar and euro. Other currencies, well, much less. The middle panel says, okay, if you take out the Eurozone countries in third-party trade, is the euro still being used? And the answer is no. In the middle panel, what you see is the dollar by far has the largest share of trade invoiced in dollars. Finally, the third panel includes in red China, invoicing in CNY. And you see that is indeed a very small amount. It is a growing amount, as you see, because Chinese trade is so important relative. I was surprised to what extent this research is not mine, but this is, as far as I know, the best constructed data on global trade invoicing. The renminbi has made invoices, but look at the scale on that. The scale is from 1 to 3. The previous scale was from 1 to 75. Okay, so it's still a very small share of global trade. I'm going to go extremely quickly because I hope in the conversation I have time to reiterate or expand on some of these points. What about stable coins? Well, a lot of the stable coins use the U.S. treasuries as backing. In a way, in effect, stable coins work a lot like what currency boards, that every time you issue one, you have to back it with it's collateralized. And so it's increased actually private sector demand for treasuries. And I would say that I think stablecoins are extremely promising for use in the very large network of global remittances. In effect, work that I've done in that already highlights that process is well underway. We'll talk more about CDBCs. They're very early stages. Only Jamaica, Nigeria, and Barbados have CDBCs. Many countries are studying. We can discuss later in our conversation. What about crypto? Crypto has fascinated me for a long time because I've studied financial crises for a greater part of my life. Crypto is tailor-made for capital flight. It's been a vehicle for capital flight. You see it surge wherever the local currency is crashing. I have illustrations here from Argentina, from Nigeria, from Ukraine. I could add to this Lebanon. I could add to this Venezuela. I could add to this the brief period in 2017 where it was thought Greece would exit from the Eurozone. So crypto is a vehicle for flight to a hard currency, whether it's dollars, euro, or something else. What about, in my last couple of minutes, is there something to worry about? There's plenty to worry about in the direction of the U.S. has taken, especially the current administration. Debt, the lack of central bank independence, that is, the threat of lack of central bank independence. This sets a really bad example for the rest of the world, but it's also quite damaging over the longer term for a currency, a reserve currency. And this just highlights how much the central bank, the Federal Reserve's balance sheet has blown up over time. However, let me turn to the final bottom line. So the reason I keep highlighting do not confuse dollar weakness with a loss of a reserve currency status is because you have to answer the question, okay, so if the dollar doesn't work, what does? The euro? The euro is a single currency, but they have very fragmented, remember, asset markets, they have very fragmented debt markets with relatively limited liquidity, and a unified market is still, at this stage, aspirational. What about the renminbi? I already mentioned that it certainly has the large footprint, bigger than the US by some measures in terms of PPP adjusted GDP. It has a unified domestic debt market, but it has the lack of convertibility, the deep capital controls are problematic for international use. My final slide. So, in economics, the saying goes, it takes a model to beat a model. And my conclusion is we don't have an alternative model at the time. The dollar did eventually displace the pound, but that was a slow process, and it took 2 world wars, which devastated both the UK and the status of the pound. So I'll leave it to you and hope we can retake this in the conversation, that while there is plenty of time, plenty of reasons to expect dollar weakness as we move forward, because many things are going wrong in the US, I think it is way too premature, and we've seen this movie before, to say that it is over for the dollar as a reserve currency. Thank you very much.
그렇다면 기조 연설을 바탕으로 한 대담을 또 바로 진행을 해보도록 하겠습니다. 오늘 대담은요, 고려대학교 경제학과 페드 출신의 김진일 교수님께서 좌장을 맡아주시고 또 기조 연설을 해주신 카르멘 라인하트 석좌 교수님과 함께 심도 있는 논의를 이어갈 예정입니다. 두 분 무대 위로 모셨습니다. Please welcome with a warm round of applause for two person, please.
So Carmen, thanks again for a very informative and also passionate lecture. Yeah. So let me start with where you ended about the U.S. situation. It's about fiscal situation, but from more short wave. When you are waiting for the plane in Boston, you must be watching the hearings for Kevin Walsh. So from your experience in the US from the 80s, how did you watch that? Especially about Kevin Walsh's view of the US Federal Reserve balance sheet, which will have impact on US fiscal situation, to interest rates, and also the Korean financial markets. So what's your view on that? Yeah, please, Mike. Yeah.
Can you hear me? Okay. So Janelle, this is also a recurring question because it's intimately connected with what I rushed through when I mentioned lack of central bank independence, okay? So just quick background, I think the US, like some other European countries, got lulled into debt is no problem because interest rates are low forever.
Right.
And this was the low for long era.
You can say that forever, yeah.
Yeah, and it was the expectation, right? That is not a problem. Now, the rude awakening, of course, came with a big spike in debt servicing costs, which, of course, prompted, you saw my quote, I hope, and you have it in your booklet, Trump saying, I want this guy to lower interest rates. So my concern, not a personal thing about wars. This is not a personal, but the situation is one that has, I remembered, I mentioned that the 70s were not a good decade for the US. Well, we have a lot of the 70s right now with us. We have a war in the Middle East and very uncertain path for oil prices. We have a bias towards higher inflation, which we've already seen. We have a bias to lower growth, which we're beginning to see. And we have an institution that's under fire to deliver short-run solutions. So this is why I mentioned do not be surprised with dollar weakness. Do not be surprised that the short run is a very unfavorable scenario reminiscent of the 70s.
I see. So I don't know if it's available or not in, say, CNN, but if you can watch the hearings for, say, Arthur Burns in the 70s, how was it like? And then that may provide us to give some forecasting ability for the immediate future, I think. So let me go to the dollar issue. So you mentioned about the current situation of the dollar, which is decreasing but very slow rate. And also you talked about euro and yuan and other assets as well. So yes, I agree with you that it's still going on for a foreseeable future. But if you look at the longer period, maybe none of us will be there, but nothing is forever, like the British pound or old imperial currencies, for example. So if you look at what's the harbinger or what's the thing we should look at, if you want to forecast in the long term, what do you think would be the early warning indicators say?
So look, that's an excellent question, and I tried to conclude precisely on that note. Look for the alternatives, right? So the indicators, the space we covered in fairly lightning fashion, I may add, was a lot of space, right? Global demand for assets, reserve holdings, currency, debt denomination, trade invoicing, a lot. You look for signs that something is ticking on the other side. I would also, add that a big unknown is geopolitics. I noted that one thing that propelled the British pound out of the, that just set the stage for the dollar was World War I, right? Let's hope it's not a replay, okay? Let's hope it, but.
I see. Okay, that's interesting because what people look for is, how is the dollar getting weakened? That's what we are looking for. But you say, no, it's not the way. How is the yuan strengthening?
Not even.
Yeah.
No. Look, currencies go up, currencies go down, currencies go sideways. They're an asset. Their prices fluctuate. That's not, necessarily going to be, unless, of course, it's very persistent. I agree with you, nothing lasts forever, but, the dollar crashed when Bretton Woods broke down, 55% lost value against the Deutschmark. This is just 1 second in terms of an anecdote. I was in Tokyo in March of 1995. This is the last intervention between the BOJ, the Bundesbank, and to support the dollar. At breakfast, I look at the breakfast bill, and I said, my God, I just ate my per diem because it was so expensive.
Today you did not.
So, it's happened before. We've been there before, but the dollar still,
Yeah. But since you mentioned the episodes of Bretton Woods, so if you put it longer, I mean, you said that dollar is from the perspective, historical perspective, should we consider, say, the Bretton Woods and Nixon shock in the same medium run or low run, longer run or low frequency movement of the dollar?
Look, the breakdown of Bretton Woods, the Vietnam War, the fact that we had a lot of monetary accommodation,
Right.
set the stage for the terrible 70s.
I see.
But then Paul Volcker came in.
Yes, 79.
79, October 79, that was a turning point. But during that period, Japan never really pushed the yen as an alternative, even though at that time Japan global footprint was much greater. The Europeans turned to Germany, so it was clear that the Deutschmark was the monetary anchor for Europe. But it didn't go beyond Europe.
I see.
So
Okay.
again, back to alternatives.
I see. Okay, thanks for the international perspective. So let's turn to the Korean, the market. I mean, everybody here knows how well. Maybe you heard about it since you worked at the Wall Street yourself for 5 years, about the Korean stock prices. The index has been kind of skyrocketing. I think it's more than doubled during the last several months. It's a history, for sure. And I haven't checked this morning, so maybe we don't have to break record or not, I don't know. But there's a heated debate on whether the recent surge, the last several months in the Korean equity markets, is due to the fundamentals or to some euphoria related to, say, AI or other digital assets. So since you have a very unique perspective because you studied at Columbia and got a job at the Wall Street first, and then IMF, World Bank, and the academia. So what's your view on this question about, not about bubbles, but about any tips on the Korean stock market in the recent days?
So, that's $1 million question. And I'm not copping out. You'll get my, direct view. When you say fundamentals or euphoria, the two are not mutually exclusive, right?
Right.
If you look at the fundamentals, how Korea's industry, semiconductor industry, is poised within the development AI, the demand, the prospects, it warrants an increase.
Right, yeah.
But I'm very fond of charts, as you may have guessed. First thing I did when I started hearing about the Korean equity market is do a plot of the KOSPI from, in real terms, deflated by CPI since 1962.
So you sent me the chart. So
I said,
if they can, make it ready, I can show you the chart you sent us.
It's an all-time high.
It's in the book as well, yeah. But if you can make the slide, I will be to.
But, okay, so it's an all-time high, but what troubles me.
Oh, yeah, here it is.
Yeah, that's the chart, okay? What troubles me is twofold. In speaking to, various market participants, including from hedge funds and so on, you get the remark, oh, but price earnings ratios are so much lower than the US. That's not the comparison, right? What you do in typical indicator, I review a lot of indicator analysis, is you compare it to its own history. And the next chart, which shows price earnings ratios, and this ends last Friday, which means that now it's up again, and so it's even the last decade average was around 11. So right now it's about twice that. It's a very sudden surge, and in Wall Street, that's why I say, look, the debasement trade has a lot of rooted on real fundamentals, but it's gone a little overboard. I am very concerned about a rude awakening on the equity market, because I think we've entered a phase that it starts to look, really bubbly. Although, to reiterate, big increases I think are warranted, but the speed and magnitude are kind of dizzying.
Right. Yeah, actually, I checked my phone and then I got another, the news feed that Korean Kospi broke 6,500 this morning. So every morning they break a new record. So.
Absolutely. In the little writing that you see at the bottom of the chart, what to call a market expensive, the price earnings ratio has to be more than 2 standard deviations away from its mean. And right now we're kind of, like 6 standard deviations away from the mean. So yes.
So we are there. So yeah, we are breaking the records every day, and then with a grain of salt. So we should consider correctly.
But be it from me to forecast, be it the dollar or the Kospi or the Dow or anything else, I'm just saying what some of the symptoms look like.
Yeah. So now that we looked at the recent few years of the Korean financial markets, let's broaden the horizon a little bit for the Korean financial markets. Because Korean markets have shown an extreme degree of volatility, not only the recent one, but also since the war broke out in the late February. And whenever there is a volatile international environment, Koreans worry a lot because of its experience in 1997-98 crisis, and also 2007-2008, the global financial crisis. And maybe reflecting that the Bank of Korea Act was revised in 2011 to include financial stability as the second mandate. So it's like a hierarchical mandate. It's not really dual. So it's not as important as price stability, but it's right after that. So I would say Koreans pay attention to financial stability, that's what they say. So given your expertise in the financial crisis, what do you think the risk the Koreans or Korea or Bank of Korea, you can choose which one, should be particularly aware of?
So, if you go back, you mentioned the global financial crisis. The global financial crisis, in a super nutshell, the countries that were most affected, the US, the UK, Spain, Ireland, Portugal, all of these countries had a housing bubble. Korea, if you look at vulnerability in terms of foreign assets, the foreign non-residents holding Korean dollar debt, treasury debt, that's not where the vulnerability is going to come from, okay? The vulnerability, I think, the biggest sources of fragility for me certainly are twofold. One is more short-term, the other is longer-term. Let me start with the longer-term very quickly.
Sure.
I think the level of household debt, the Bank of Korea has written about this. Their financial stability report really is, absolutely. Look, one of the lessons from the global financial crisis and from many of the crises that I've studied through history is that what is private debt before a crisis becomes public debt thereafter. The effort to bail out institutions, whether they're financial institutions, whether to help households, whether to support corporates. And so I think that there's two things that I want to flag here. One is the level of indebtedness and the level of exposure of banks to real estate is very high by international standards and by Korea's own historic standard. The second is, this is actually an underestimate because, I I really pronounced it very badly. Was it Jason?
전세. 전세. Yeah.
Okay. He said it, okay? God forbid that I should try to repeat it.
But you wrote correctly over there.
But it adds another layer to the debt problem. I think, so that is a structural issue that I think, and if you look at the financial stability report, we are seeing some fraying at lower income households. The other issue, the shorter term issue, is the volatility issue that you have mentioned. You know, I noted that sudden stops, capital flow reversals aren't likely to come from a big sell-off of government bonds. But they could come from a sell-off of Korean equity.
Sure. Yeah. Okay. It could. Yeah. Oh, I see. Okay. So those are the risk or worries or some moment we should be aware of. Yeah. Maybe we need a harbinger for those moments. Yeah. Okay. So you mentioned that this year is the second visit to Korea during the last 6 months. So when you visited and gave a breakfast talk late November, I was there. And then your comments on macro-prudential policy and financial repression intrigued many Koreans, including myself, because actually when I went to the United States as a graduate student first year, Xavier Salai Martin was my first macro teacher, and he hired me as a research assistant to look for indicators of financial oppression, right? His typical growth regression. And he chose me because Korea is a perfect example of oppressed finance. But all those measures are now called macro-prudential regulation after 2008, yeah? It's a change of the names. So Korea is a very prominent example of both financial oppression, but also macro-prudential regulation like the LTV, DTI, yeah, and those things. So that's why your comments on observational equivalence between macro-prudential regulation and financial pressure was intriguing. And then you mentioned that that's an equivalence from an empirical standpoint, right? So then if you go to the normative standpoint, how are we able to identify the two separately, or if so, how? Because we want to impose, I mean, most of them, I saw change exchange card with the very senior bank officials, private banks, and then whether that's a macro-prudential regulation, it's a good thing for the country, but it's a financial oppression, it's bad for the country. That's a very highly loaded word. And what should we look at from the normative perspective?
Okay, let me be very, very clear. Korea had, as you noted, financial repression for many years. But I think it moved beyond that for a long, long time. My comments actually were primarily about the US, the UK, and other countries that had a crisis, a systemic banking crisis in 2008, 2009. And how did you distinguish between macroprudential and financial repression? Well, sometimes you can't distinguish, but let me give you one specific example. In Korea, you haven't seen the pension funds or banks or other financial institutions are required to hold a higher share of government debt. That is a classic, right? You could say, that's warranted because, government debt is more liquid, right? So it's macro-proof. But it's also how convenient, right, if you have a rapidly rising level of debt. So let me be very clear, that we have not seen in Korea. I think a lot of the macroprudential measures that I was specifically talking about, I have a paper on this called The Liquidation of Government Debt.
Yes, already,
That basically highlights when you start seeing the government creating captive audience for its debt.
I see.
That's a sign of financial repression.
So that's
I
the
hope
way
that
to look
helps.
at. Okay. So if you look back 2008, 7, 8, I was working at the Federal Reserve. So what should we have looked at, say, for the case of Lehman? If you look at the oppression, what were the measures maybe that's not available then, the Federal Reserve failed to look at, if you look, to the...
So, it's always easy to identify failures with hindsight, right?
Yeah, Monday morning quarterbacking.
Right,
Yeah,
yeah.
I can do that. Yeah.
But there were warnings about the Fed, like other central banks. It's not part of their mandate to deal with asset prices, right? I
Right.
mean, you have an inflation mandate, you have an output gap mandate. So what was the Fed missing at that time? Well, it was missing that housing prices, were way off their peak in terms, way off their historic norms. And that was true pretty much.
Yeah, the mandate, I agree. Yeah, because that's my rationale as well.
Right.
But still, they did worry about financial stability, of course, and they look at the subprime mortgage, for example. Like that's one Ben Bernanke asked the staff to look at. And then that your husband was working, and then, my boss, by the way. But of course, it was done more by the domestic guys about how big is the subprime sector and what would be influence the financial market. And we underestimated it basically, right? So that underestimation is, I think, your measure of financial oppression. It's so oppressed. So when something happens, it just blows up. Like our body, when something goes wrong, we didn't expect that, but it happens. So I think that's oppressed one, as you said, exposed. We could, that was the problem. The Lehman, for example. But nah.
I think one thing that is very opaque, is if you look at the topic of financial contagion, it is plagued by opaqueness.
I see.
I think the extent, for example, German banks during the GFC didn't have a housing bubble. In effect, housing prices in Germany had been flat to down for some time. But they had bought U.S. Subprime mortgages.
Right.
And so those linkages, which you don't often pay
Realize,
attention to.
yes. I got it.
Yeah.
Okay, so
And my motto is
linkages.
usually think the worst.
I see.
Yeah,
Okay. You should
in terms of potential amplification.
So expect the worst and think about what could happen in what they usually call worst case scenario.
This is self-serving, but it is true. I wrote a short piece which was published in January of 2008 called "Is the Subprime?" And the Fed looked at this with Ken Rogoff.
Yes.
And
I read it.
okay, which basically, and when we presented that at the American Economic Review in December of 2007, if this doesn't happen, we're going to look like idiots. Because what we basically said in that piece is this has a lot of the symptoms of a systemic banking crisis.
That's like 3 months before the Bear Stearns
Yes.
collapsed.
Yes.
Okay. I see. That's personal to you as well.
Yeah.
So, does the central bank balance sheets come in that angle as well for,
So,
macro proof? Yeah.
So what is the take? What are we showing here? This is a correlation, a simple correlation. Look, you've heard us talk here about the loss of central bank independence. And I'm particularly worried because a lot of the advanced economy, this hasn't happened in Korea yet. Now, of course, the IMF is already raising issues about whether Korea's debt is going to grow very rapidly. But what this chart shows is the correlation between the level of government debt and the amount held by the central bank. And they're very positively correlated. So the tendency for the central bank to accommodate is, to me, troubling.
I see.
Why? Because it enables, it keeps interest rates lower than they would otherwise be, and it enables further borrowing.
So you think that these rates is sort of too low for that reason?
Absolutely. I've gotten pushback on this from my colleagues, like Larry Summers, Olivier Blanchard. No, rates are exceptionally low because we have,
Secular stagnation.
yes, secular stagnation, but the thing is, what this chart shows is the real short-term policy interest rate. You see 4 periods that are shaded. World War I, World War II, the 1970s, which I've referenced several times, and the period since the global financial crisis. Exceptionally low real interest rates. They were all periods of financial repression. They were all periods of very accommodative monetary policy.
I see.
So if I just conclude on this is, real interest rates finally have turned positive again, which is the historic norm. Did demographics change? And I'm
Sure.
not aware of it.
Yep. Demography as well, especially in Korea. Yeah, for sure. I see. So that low rates for those gray periods are too low for macro fundamental standards. That's what
Yes.
your view on that.
Yeah.
And then the Summers and others' view on the secular stagnation should not be as strong as that.
Yes.
Okay, it could be something.
Yeah, absolutely. I don't
You're not
deny
denying
that.
that?
I
Yeah,
do
yeah.
not deny that.
But that's something more
Yes.
than secular station going on over there. Okay, so let's switch gears and about the current Korean policy, like the financial policy. So I don't know if you heard about it, but the current administration, I think we heard the video from the Vice Prime Minister, but the financial authorities emphasize what they call the productive finance as it's the motto for the financial stability and the financial policy itself. Because, let me put this in context, because you mentioned about 전세 and real estate sector thing, and it shows that real estate sector received too much financing in the past, at least since the 97-98 crisis, which was due to the firm side. So they switch it to household side, maybe switch it too much during the last, say, 30 years. And so what people think, especially the government thinks, is the productive industrial sector received too little investment. And this financial drive from the housing sector to the industry, if it's too fast, that also could create problem in the future, say the 97-98 crisis as we saw. And you mentioned about the Korean investors, the investing overseas, which is what they call the Western ants.
Yeah.
Yeah, and you heard about it, I'm sure. But also in the domestically as well, the many investors, especially young investors, borrowed a lot of money, maybe I think too much money in the capital markets, and they invest in Korea and also in the US capital markets. So when we evaluate, given that you have investigated the global financial crisis and history for a very long period, so what do you think the Koreans, like for example, the 한국경TV media, who is hosting it, or the government should look at to evaluate whether some change of the policies into, say, productive finance is good or bad? Or I shouldn't say bad. How much is too much and how much is the optimal? What should we look at?
Look, it is tricky because you also have to change incentives for the banks.
Yes.
Many
of them are here.
lending with collateral is very attractive. But lending with collateral will also not save the banks if they're overly concentrated and prices come down. That was very much part of the story of the global financial crisis. So and I agree with you, one has to be cautious that there isn't, a sort of propelling swift redirection of lending into highly risky startups, okay? That's, okay, you have to measure risk, you have to have an assessment of risk, but again, there are risks on overconcentration. If you look at systemic banking crisis through history, it's overconcentration in housing, overconcentration in commodities. Of course, in the run-up to the 30s, there were also overconcentration in equity, which is obviously not an issue. But so there are risks to doing nothing also. My sense is that the direction is good. The direction to Korea's, because of a big challenge Korea and many other countries, but Korea faces it, for sure, is the demographics are such that growth is poised to slow further. It's leaning against, the headwinds to growth are big.
I see.
I think an era of faster growth in Korea also had, there was more financing available for investment. So I think we need to take the risk of doing nothing also very seriously.
So there is a related question just came up here. So we talk about the financial policy, but if you broaden the government policies, on which we are not experts, but anyway, so from the angle of the fiscal policy, or these days what called industrial policy, about industrial policy, there is a big issue until '92 when I went to the United States, and nobody worked on it until Trump came in. So from the perspective of the fiscal policy and also the industrial policy, what should the government help this transition to productive financing from that angle?
So look, the thing is, first, industrial policy has become much more accepted now. And it isn't just Trump. I mean, the Draghi report.
Yes.
If you look at the Draghi report, industrial policy, it's written all over it. However, industrial policy has, has a mixed track record, right? I mean, it has worked well in some cases, but also it has worked abysmally in Latin America, in the industrial policy for the 50s and 60s is basically what Trump is using today, which is, you want to do import substitution, you want to do protectionism, and it was industrial policy with abysmal results. Asia did much better as a region. So it's not new. I think one thing that I would caution is industrial policy also has fiscal strings. And, we are in a situation in which debt is again, not a big issue right now for Korea relative to what we see especially in other advanced economies.
Sure.
But, there are pressures to do industrial policy, there's pressures to green, there's pressures to deal with better safety nets given an aging population. And there is, if we are indeed out of the low for long or low forever real interest rates, greater debt servicing costs. Okay. So it's competing.
Okay. So as we have to look at the fiscal consequences of the financial policy, we have to watch out for the fiscal consequences for the industrial policy.
Yes.
So that's where.
Yes.
Oh.
And it is competing with other, we hear about the need for a greener economy. We need for the fact that the demographics themselves are, pivot towards a greater debt burden. The issue of debt servicing burdens for Korea are very low. But that's another area that
That's
We've already seen
really
it in the U.S.
intriguing to me personally, because when I was working at the Federal Reserve for about 10 years, we used to call the IMF, where you worked at, as it's mostly fiscal.
Yes.
Yeah. And then you tell me that even though IMF is doing a lot of financial things, but what's driving or what we should worry about is the fiscal. Okay.
It's mostly fiscal.
I
It's
see.
been a very appropriate joke. But I think it is apropos if you look at some of the issues that one encounters, like problematic monetary policy, i.e., fiscal dominance. Well, the root of the problem is fiscal. It gets transmitted to the monetary. I think, that is why I also highlight that there are a lot of demands on fiscal policy at the moment, and I think selectivity is very important.
Yeah. You taught me more than the IMF taught me for the last 10 years there. Okay, thanks a lot. Okay, and we have about 12 minutes, so, okay, I do not steal too much steam from the second session, but maybe it's an introduction second session that about the stable coins a little bit, not for the whole thing, but at least for your angle. So I don't know how many times you have to spend the dollars or Korean currency while you are in Seoul until tomorrow, but exchange rates have broke 1,500 for the first time since the global financial crisis. Now it's below, but it broke 1,500, like the March of this year, I think. Yeah, and in this situation of high exchange rate or the low value for the Korean currency, introduction or discussion of the stable coin in terms of Korean won, and is debated right now, let me say, and then it was touched on by the new governor of Korea, Hyun Shin's the speech yesterday as well. And what do you think from your study of the financial history, especially the key currency versus non-key currency, if the stable coins are introduced, how would the effects differ between the key currency like the dollar and the currency like the Korean won or other smaller countries? What's your view? Yeah.
So I have a former student that I have worked a lot with and currently working, Clemens Graf von Luckner. He's spent a year in Stanford and is going to the IMF. He's done a paper, looking at stable coins, crypto, a lot of, data. And Korea has the highest volume
Yes.
and a remarkable volatility. So you asked me about what is triggering the weakness in the won. And this is connected to a point that I had made earlier. You look at that figure that I had, foreign holdings of Korean government debt. And typically, in the big crises, you often see a sell-off of the debt, and that triggers the currency. And a lot of the won weakness is very homegrown.
Yes. Okay.
And it is demand for non-won assets, right? You go into stable coins, and as I noted, stable coins are backed by treasuries. You're really doing a dollar play.
I see. Yeah.
You go into U.S. equity, and you're doing a dollar play. So, you mentioned the global financial crisis, and during the Asian crisis, you mentioned also the Asian crisis. The Asian crisis, people have remembrance of also an earlier crisis, the exchange rate mechanism crisis in Europe in 1992, and they have visions of Soros, bringing down the pound, and the Bank of England lost half of its reserves in 5 hours.
Right.
But the real catalyst to the collapse in the rupiah, okay, the Indonesian rupiah lost like 65% in it, and it was corporates trying to prepay their dollar debts.
Oh, okay.
So what I'm saying, you really have to look at, the domestic behavior. The volatility is but not imported necessarily.
Not purely foreign.
Yeah.
What's happening inside?
But let me say, I think one thing that could be, very positive for the won, I think the won is getting listed finally in many indices, international indices. Okay. That if the trend towards diversification into other assets, creating that larger international pool in pension funds and sovereign wealth funds, and getting listed has been I think a positive step in.
Okay, that's great. Yeah, okay. So we have about 8 minutes left. So anybody want to raise a question on the floor? We can entertain one or two before getting back to the last question. Or anybody? I cannot see very well, but yeah, there's one on that side. Can somebody bring a microphone? Yeah, it's right there.
한국말로 하겠습니다.
네.
지금 굉장히 좀 프랙티컬한 질문을 좀 드리고 싶은데, can you put on your?
I'll translate
Oh,
later.
yes.
Yeah.
지금 현재의 미국 금리 수준을 어떻게 평가하는지 알고 싶은데요.
네.
사실 우리 교수님은 저금리에 대해서 부정적인 생각, 부채를 불러일으킨다는 그런 생각을 가지고 계신데, 현재 미국의 금리는 굉장히 빠른 속도로 올랐다가 사실은 어떻게 보면 조금 점진적으로 내려가는 추세인데, 현재의 금리 수준을 높게 보시는 건지.
지금 정책 금리를 주로 말씀하시나 기준금리.
네네.
So she said, if you look at the Fed funds rate during the last 5 years, say after COVID, after temporary, and then they shot up and then came back. So do you think the current rate is too low, or the last 5 years it fit with your story of the too low real rate as well?
So that's an excellent question, first of all. Thank you. The federal funds rate remained in negative despite despite the pivot in Fed policy.
And by pivot, you mean 2022?
Yeah, exactly, to raise rates. It remained in negative territory for some time because it was so low.
In real terms? Okay.
In real terms,
Yeah.
in real terms, which is what I... So if you look at the federal funds rate from a historic perspective, it's still below historic norms, okay? What are other indicators, though, saying? I mean, there's a tendency to think, well, policy has been much tighter because we have seen a correction in the central bank balance sheet, because we did see the raise in rates. But you look at credit spreads, and until recently, and even now after some widening, they're very tight. That is an indicator historically of liquidity, and it suggests it's fairly accommodative. If you look at price earnings ratios and asset prices, the equity market, notwithstanding the bad shocks we have had, and they're pretty bad, they remain buoyant.
You mean your president, right?
This is, these are indicators that liquidity conditions, in my interpretation, and this is not just my interpretation. If you read Kindleberger, fabulous history of
Sure.
these are markers of global liquidity, and they look pretty accommodative at the moment.
I see. Okay, thanks. Yeah. So you have 5 minutes left. So you mentioned that you spoke at the spring meeting of the IMF.
Yeah.
I don't know whether the Bank of Korea Governor Chang Yong-ri was there or not. If he were there, what did you tell him, or what would you have told him as an outgoing governor to him. And then, you know, Hyun-shin, the new governor, very well. He's starting his third day today or third day today. And what would you tell him if he calls you up this afternoon? Okay, hi, and then what's your advice for me? So they can write it in the newspaper, yeah? And what's your advice for him for the last 3 minutes? Yeah.
He always puts me in these difficult spots, right? But I think if you read his speech,
The new governor.
yes,
Yes, I did.
I think I'll tell you the takeaway that I liked very much. He's worried. He's worried about growth. He's worried about volatility. He's worried about financial fragility. I think the focus on broadening the scope for the mandate for financial fragility is very on point. So I think my advice is do what you said you're going to do. I think it is a good sign. Complacency, I think, is usually the biggest problem for a policymaker. And I think the sign that he is concerned about many of these important issues speaks well.
I see. Do not be complacent. Okay. And did you meet Chang Yong-ri when he was in Washington last week?
No, I
okay.
didn't. I didn't.
Okay. What would you have said? What would you have said for the last 4 years?
I think good job.
Okay.
I think good job. I look, what have we had? We've had one shock after another,
Yeah,
right?
Yeah, the last 4 years for sure.
No, we've had, we've had COVID. We had Trump 1. We had, COVID. We had Trump 2. That's a big shock.
And we had martial law in Korea.
Yeah, indeed. I'm even just speaking to the external. The Russian invasion of the Ukraine, you cannot, the Iran war is mimicking to some degree that.
Yes.
And by the way, I'm not so optimistic as futures market. I think futures markets are
Too
way
optimistic.
optimistic. But my basic would be good job. You were dealt a very difficult hand.
Yeah. His 4 years was difficult. I mean, for all governors, it's tough job. But
I think it, even leaving aside the very deep issues,
right.
Domestic issues, the global panorama, you have to admit,
Right.
has been.
Yeah. Okay.
Yeah.
So since we have 1 minute, so last question. So
You
mentioned-
promised that was the last one.
Oh, sorry. Yeah,
No,
we
it's
have
okay.
still- yeah,
It's all
one or
right. It's
two,
okay.
yeah.
It's okay. Go ahead. Go ahead.
And for you mentioned about World War I, World War II for the dollar. So for the Iran war, it would not be the catalyst for sure. But when you look at the war from your angle, what's the feature you want to look at for your understanding of the financial development? Yeah, you read newspaper, but what do you look at more?
So look, the acceleration from the British pound to the dollar, I noted, involved 2 world wars. These were world wars that left Britain, both in World War I and later again in World War II, with a huge, huge debt burden. By World War II, it had lost its colonies.
Yes.
These are not your run-of-the-mill, shocks. This was an accelerator. The creditor to the UK was the US. And that, the reconstruction of Europe
Okay.
anchored Europe for a while in the dollar.
Okay.
So these are big events, right? You're talking about the Marshall Plan. I mean, What I'm saying is that, you know, it wasn't just a trade or, you know, it wasn't just financial asset developments. It was much deeper than that, that catapulted that transition. And I'll conclude here, in the interwar years between World War I and World War II, you had a period there where there were two reserve currencies, both the dollar and, because in the 20s, already in the 20s, when the British pound was still, bond issuance, global bond issuance in New York soared. It was very clear already that the dollar was poised for New York to be a financial center. But you had that period of duality in there.
Okay.
We don't have a duality at the moment.
Right. 80%.
Yeah.
Yeah. So.
This is the last one, right?
Right. Yeah. It is.
Okay,
Yeah.
okay.
Rest assured. So political economy and fiscal policy, I would summarize for myself for that. Okay. So please join me thanking the speaker, Carmen Reinhardt.
네, 감사합니다. 좌장이신 김진일 고려대 경제학과 교수님과 카르멘 라인하트 교수님께서 이렇게 귀한 시간 내어 본 행사를 빛내주셨습니다. 저희가 사실 사전에 질문을 굉장히 많이 받았었는데요. 시간 관계상 더 추가적인 질문을 받지 못했다라는 부분 양해의 말씀 좀 부탁드리도록 하겠습니다. 자, 1세션과 대담 어떠셨는지요? 바로 이어서 2세션을 이어가 볼 텐데요. 1세션 때 기대하셨던 만큼 2세션도 여러분을 실망시키지 않을 분들로 저희가 또 중요한 자리, 소중한 자리 한번 마련해 봤습니다. 이어지는 2세션 바로 시작해 보도록 하죠. 2세션에서는 디지털 화폐의 부상과 그 의미에 대해 살펴보는 시간을 가져볼 텐데요. 디지털 화폐의 부상, 공존인가 전환인가 라는 주제로 기존 통화 시스템과 디지털 자산이 공존하게 될 것인지 아니면 새로운 금융 질서의 전환으로 이어질 것인지에 대한 깊이 있는 논의가 이루어질 예정입니다. 먼저 발표를 해 주실 분 소개해 드릴게요. 비트코인과 통화 이론에 대한 깊이 있는 연구로 잘 알려진 경제학자십니다. 사이페린 아모스 저자님을 무대 위로 한번 모셔보도록 하겠습니다. 사이페린 아모스 저자님 무대 위로 올라와 주시면 감사하겠습니다. Please step up to the stage, Dr. Saiferin Amos.
Thank you. Yes. Thank you very much, everybody, for being here. Thank you so much for the organizers for the invitation. It's a pleasure to be in Seoul. It's only my second time, but I love it more every single time that I visit here, and I look forward to coming here more in the future. So, in today's talk, I'm going to be discussing Bitcoin, and I think I want to thank Professor Reinhardt for her talk, which really leads up to my talk in a very nice way. I titled my talk Apolar Money, which I think is a good way of emphasizing the value proposition of Bitcoin, which is that we live in a unipolar world order where the US has the dollar. And when we discuss alternatives, it's either another unipolar world order or a multipolar world order. But Bitcoin offers us something truly new, which is an apolar world order, a monetary world order that is not built around one government having an exorbitant privilege. So I'm going to first begin by identifying some of the main problems with government money, both domestically and internationally. The biggest problem, which I talk about extensively in my books, is inflation. If you look at the last 60 years, the average fiat currency has increased in supply by about 14% per year. The better fiat currencies, like the dollar, the yen, and the euro, have increased at about 6, 7, 8% per year on average. And the worst ones have gone up by 20, 30, 40, 50% on average. So this is devastating. And of course, the other problem with government money is hyperinflation. Only government money does hyperinflation. As the great Ludwig von Mises used to say, only government can take a perfectly good commodity like paper, sprinkle some ink on it, and make it worthless. That has only happened with government money. It's not happened with any kind of other money in history. So what is the implication of high inflation and hyperinflation for the world? Well, the most devastating implication, I would say, is that it has destroyed the ability of people to save, it's destroyed capital accumulation, and it's also destroyed family formation. So under the gold standard, you just saved in gold. Gold was money, and you just held it, and it appreciated over time, and it held its value. Under fiat, you need to be a part-time hedge fund manager in order to be able to just simply keep the wealth that you've already earned by working your job. You can't just be a dentist or an engineer and save. You have to go out there and figure out what stocks and bonds to buy. And that makes you a part-time hedge fund manager. And that's, of course, very difficult because most people can't pick stocks to save for their future. Another way in which people save is that they turn their houses into bank accounts. People use their house as a bank account. And the result of this is that houses keep continuing to become more and more expensive. Everything should be getting cheaper because we're getting better at producing houses. Houses should become more affordable. Instead, they're becoming less affordable because houses are not consumer goods today. Houses are saving accounts. And so when a 25-year-old couple are looking to buy their first house, they're not just competing with other 25-year-old couples looking to buy a new house. They're competing against 65-year-old retirees looking for a saving account because their money is broken, because their money is optimized for financing their government, not for them saving for their own future. So, and then the third thing, of course, we also get massive stock, bond, and asset bubbles arising from people using those things as savings. Very few people look at balance sheets when they invest in companies anymore. They don't value companies. They just think everything is going to go up. Ultimately, they're right because everything's going up because the dollar is going down, and you need to have hard assets that are harder to make than the dollar. And that's what drives all of these bubbles in these assets. They're not valued based on fundamentals because they're valued as money. They're a replacement for money that is broken because of inflation. So, the problems of fiat money, it finances war, endless war. It's no coincidence that the century of central banking and fiat money was the century of total war. Under the gold standard, governments fought until they ran out of their own gold. Under the fiat standard, governments fight until their citizens' money runs out of value. And that means a much longer runway for wars, and that's why wars in the 20th century drag on and on and on and on. You look around today, nobody in America, or almost nobody in America, thinks about the cost of Iran, of the war in Iran. They just don't think of it as being real because the government just prints money, borrows money, and then pays it off with printing money. And citizens don't understand this, and they just see their prices rise, and they think it's because their local supermarket is being greedy. They don't understand that it is the central bank financing the mass murder of foreigners that is making your groceries more expensive. And of course, fiat money has led to the rise of the omnipotent state. Government spending and control of the economy exploded in the 20th century because fiat teaches governments that there's no opportunity cost. They have infinite money for meeting whatever needs they want, and they don't have to think about the costs. And the most relevant problem with fiat money for today's talk is that fiat money necessarily results in a unipolar world order. Money is a network good. It wants to be one. And network goods tend towards centralization in one network because there are so much more benefits from joining the bigger network than joining the second one. So internationally, the world wants to have one money. So in a world of national currencies, one of these national currencies is going to have to become the global money. And without gold as the neutral basis for global trade, it has to be a national currency that is issued by fiat, whose supply is completely under the control of the central bank. And this magnifies and adds to the problems of government money. The unipolar money problems, separately from the rest of the problems, the first one is what is called the exorbitant privilege that the US has, where it gets to print money and export it abroad. And I use print figuratively, of course, most money is digital today. But they export their inflation abroad. People around the world have to buy dollars and dollar-based assets, and that props up the value of the dollar, allowing the US government to inflate more. There's no nice way of putting it, but effectively the dollar is a way for the US to rob the world. It's not said so blatantly, but that's ultimately what it comes down to. And some of us have problems with that because theft is bad, and we believe in quaint things like morality and so on. And it creates massive problems for the world. It makes the US monetary policy global. Jerome Powell is the world's central banker. He's not just the US's central banker. Everybody from Korea to Japan to Africa to Latin America has to follow what happens with the Fed. in order to just save money. If you're a dentist in Brazil, you need to care about what the US Federal Reserve is doing just to save money. And the US fiscal problem is the world's problem. Everybody is saving in dollar-based assets, and dollar-based assets are endangered by the insanity of the fiscal spending that the US government has been doing, and that is a problem for the whole world. Now, everybody's saving account is linked to the insane policies followed by the people who are in charge of the US government and the US central bank. And of course, the other problem is the problem of external imbalances. One government gets to print money, everybody else needs to use that money, and so therefore that government that prints the money, we witness it deindustrialize and decapitalize. Why would you invest in actual productive business in the US? Why would undergraduate students study something like engineering in the US and to try and go and build an actual factory that makes things, when you can just do financial engineering and just sit behind a keyboard and move fake money around and get to print more money and benefit from the money printer? That's essentially what most of the US economy fundamentally does these days. It's just inflation arbitrage. Just how do we find a way to get ourselves closer to the money printer so that I can benefit myself? Why would you work? You know, if you look at the American universities today, undergraduates want to go into all of these fake fields of basically living off of printed money. And it forces the rest of the world to work hard and produce in order to pay the dollar inflation tax to the US. It also finances US hegemony. Essentially, we live in a world order where the US is bound by no rules because it has a money printer. If you had a money printer in your basement and you could print Korean wons in your basement, you're going to live differently from people who don't have a money printer. You have the ability to do whatever you want and face no consequences. And that really is the best way to understand US behavior in the world. Today, under Trump, it's taken to extreme lengths, but it's always been the case. This notion that we live in a rules-based world order is obviously ridiculous. It's not rules-based, it's fiat-based. It's based entirely on the will of the US government. And it allows the US government to have enormous control over the rest of the world's payments and money. And that allows them to impose sanctions. And that allows them to impose the unipolar world order in everything, because they're the only military that can print money, whereas everybody else needs to earn their dollar. The unipolar world order has been a problem since the 1970s. Now, you could say it is falling apart now, and the war in Iran might be a tipping point. I think it is really significant. I mean, you know, people have been saying this for a while, and Professor Reinhardt said, you know, this is, a lot of people have cried wolf about the end of the dollar and the end of global US hegemony. But, you know, if there were a lot of wolves showing up, a lot of people would be crying wolves as well. It takes time for the wolves to get to your home. So I think we could see that the Iran war was a major turning point in this, because the idea had always been marketed that the US is out there providing stability and safety and security and protecting you from enemies. And that's just becoming more and more untenable, because for more and more countries, the real enemy that they really need to be worrying about at this point is the US. Whether it's their trade tariffs and all of the crazy policies that get imposed capriciously by Trump whenever he grabs his phone and starts tweeting, or if it's the war. I think the war was just an enormous big problem for the majority of the world's countries, because their economies are heavily dependent on oil that comes from the Gulf. And that was just completely ignored by Trump, who went along with the war without any concern for his allies, without any consultation for what they would expect, and without any strategy for dealing with the Strait of Hormuz. Netanyahu suckered him into the war because of Israel, and now the world has to contend with the fact that the US government is not a sane government that is even looking out for its own interest. It's essentially a puppet government for the Israelis that's sacrificing all of the US allies, sacrificing the global world economy, sacrificing the US dollar system in order to allow Benjamin Netanyahu and his fundamentalists to steal more land from Palestinians and Lebanese and Syrians. This is essentially what it comes down to. And I think Korea here is a very interesting example, because the USA withdrew the THAAD batteries from Korea, and Korea had gone through a major diplomatic crisis with China in order to install those defenses here in the US. And then the US just ran out of batteries in the Middle East because they had thought, because Netanyahu had convinced them that the war was going to be over in 3 days, and then, oops, it wasn't over, now we need more defenses. So they just let Korea lose the THAAD missiles, and they took it. And now Korea is in a problem because it's losing its security guarantee from the US, and its economy's biggest threat is US foreign policy. So this puts Korea in a very interesting position where now the Korean government is considering negotiating with Iran directly and going behind the US's back to secure its oil. And if you think about it, it really makes a lot of sense. So this really puts the entire US sanctions regime against Iran in question. Countries now have a lot of incentive to deal with Iran, which they didn't have before the war, which is just another example of the enormous geopolitical impotence of this current US regime. And this, I think the real key thing here is that this just makes holding dollars and treasuries less attractive. As Professor Reinhardt explained, the things that make the dollar the global reserve currency, I think perhaps the most important is the fact that the global treasuries market is the world's largest and most liquid market. And therefore, that's where real money wants to go. That's where sovereign wealth funds and that's where central banks want to have their liquidity because they want to come in and out of large markets with a large liquidity. But now, we have the political case for trying to diversify away from the US dollar treasuries, and also we have the economic case, which is the US dollar treasuries are a terrible financial asset. If you've invested in US dollar treasuries over the last 5 years, congratulations. You've donated half of your wealth, roughly, to financing the US government's operations. It's a terrible, terrible thing, and the idea that it is risk-free is a joke at this point. So the world needs an alternative. What can it be? I think Professor Reinhardt did a great job by explaining why none of the other alternatives offered by governments can do the job. The yuan, I think, quite simply, China clearly doesn't want this, which is why they don't have capital markets that are open and they don't have convertibility. So China doesn't want to replace the dollar. The euro, you could say, is just a dollar proxy as long as European countries are so dependent on the US and they're essentially really puppet states of the US. And the idea that the euro is going to challenge the dollar, I think, is very far-fetched. But more importantly, the real issue is that if you replace the dollar with another national currency, you don't solve the problem. You just replace the problem with an identical problem. If we have a yuan, then all of the problems that we have with the dollar as a reserve currency will be repeated with the yuan as a global reserve currency. So the only workable solution is a neutral asset controlled by no government or central bank. Gold provided this in the 19th century, which is essentially why goods and gold flowed across borders at the discretion of their owners. There was no trade imbalance in the 19th century. People didn't worry about trade imbalances. Goods went from France to Germany when French people wanted to sell things to Germans, and money went from Germany to France when German people wanted to do that. And nobody needed to keep track of how much gold and how much money was going there. It's just another good that's moving around, and there was no fundamental problem of imbalance. You didn't have to balance trade and money because money was a fixed commodity, just like all the other commodities. Whereas now, when money is just a fake loyalty scheme for the government, its value is fluctuating with trade, and so the monetary policy has to try and balance the trade policies. And that's essentially the function of the IMF and the World Bank and the World Trade Organization, who are all there to do what the gold standard did spontaneously. It achieved it without central banks or without international financial institutions who are failing at achieving what the gold standard did. But why did gold fail? Why do we no longer use gold? Well, it wasn't gold that failed, it was us who failed. It was us because we, essentially governments, I shouldn't say we, I wasn't around, but governments wouldn't let people use a form of money that they can't inflate because they wanted to finance war. And the reason that they could stop gold is because they could stop gold. They had the ability to stop people from using gold because gold is physical and it needs to be centralized. And a modern economy where trade keeps moving at a faster pace across the world, at a faster speed, it becomes difficult to move physical gold every time you want to transact with people. So people started using secondary instruments instead of gold, and that led to the centralization of gold in central banks, which then made it easy for governments to just one day say, okay, your paper is no longer redeemable for gold because of war or whatever, and it's only temporary, but it's been going on for 120 years now almost. So a gold standard, because of its centralization, devolves into a government credit standard. Gold is too slow for a modern economy. Goods move faster than gold. Well, Bitcoin is the solution to this. Bitcoin automates and improves on the functions of a central bank and can function as a neutral global money. The two key properties of Bitcoin that make it really important as far as I'm concerned is its scarcity and its digital settlement. Scarcity, Bitcoin's supply is fixed, making its monetary policy essentially perfect and apolitical. It's the best monetary policy in the world. We're just dealing with another few decades or about a century of a little bit more inflation. But Bitcoin's monetary policy is to take inflation to zero. And by inflation, I mean supply growth. And that's the best monetary policy imaginable. You don't need to create more money in order for the economy to grow. The value of money can just go up, and that's what Bitcoin does. And that is an enormously important point, which I think most economists miss because they haven't really thought through the implications, which is what we're going to do now. Now, the second important property of Bitcoin is that it offers digital final settlement. Bitcoin's settlement network is global and its operation is independent of any national authority. You can send money from Korea to Brazil using Bitcoin without having to go through central banks, without your government or the Brazilian government even finding out that this is happening or taking place. So the fact that it is essentially a digital form of final settlement makes it similar to cash, makes it similar to gold, but its scarcity makes it even better than gold. So the fact that it can't be inflated, there's no central bank, it can't finance war and governments with inflation. That's a feature, not a bug. A lot of the economists, when they complain about Bitcoin, they say, oh no, but if we have Bitcoin as money, how are we going to finance the government? Exactly. You can't finance the government with inflation. You need to learn to be a responsible adult and try and spend less than you earn, and try and find a way to earn that doesn't involve you devaluing the money of everybody else. Is that going to harm governments? Absolutely. It's going to limit their ability to control their citizens, and that's a good thing. But another thing as an economic asset is that Bitcoin can be used as a saving asset, freeing houses to go back to being a consumer good than a saving account, going back to the original problem that I mentioned. So people can just save in Bitcoin rather than saving in stocks and bonds and things that they don't understand, and saving in houses that makes it more and more expensive. But most significantly to the topic of this presentation is that Bitcoin is apolar money. It's independent of all monetary policy. It doesn't provide any country with benefits at the expense of another. Nobody has a Bitcoin printer that they can use to devalue the wealth of others. It can be used by everyone, and it can be banned by no one. Nobody can stop you from using Bitcoin. It's completely transparent and apolitical, and it allows everybody in the world the freedom to engage in trade and capitalism regardless of their politics. If your government does something that pisses off the Trump administration, you can still trade with the rest of the world. You don't have to be held hostage by all of these governments controlling your banks and central banks. Essentially, Bitcoin separates money from politics, and I think this is a hugely important development. It's important here to note, we have stable coins, we have CBDCs, we have other fintechs, and they remain dependent on state currencies and regulated intermediaries. They may be able to modernize consumer payments, but Bitcoin is completely different. Bitcoin is not here to replace Western Union or bank transfers or PayPal or Venmo or credit cards. Bitcoin is replacing the base layer of the monetary system. It's replacing the system of settlement between central banks and large financial institutions, and it's replacing the monetary policy that is conducted by central banks, and instead replacing it with an algorithm that is predictable and transparent, and everybody in the world can use it. So we are essentially removing a manual, political, partial, corrupt, unjust, unipolar system with an electronically automatic, apolitical, impartial, just apolar system. Bitcoin essentially would replace the aggression-based fiat world order with a rules-based Bitcoin global order. Now, I'm sure most of you are thinking here, who is this guy and what military he thinks is going to impose on the world the use of Bitcoin? And the answer is, I'm not here to tell you what to do. I'm not here to force you to do it. I don't have a military. I'm not going to shoot anybody. And you can shoot me and it won't make a difference. I'm here to explain economic reality. Bitcoin will win not because it's a political choice. Bitcoin will win not because politicians are going to be convinced. There will be no grand treaties. There will be no negotiations. There will be no voting on these things. This will be imposed through the force of economic incentives. Bitcoin will win in the same way that computers replaced typewriters. It's just a better technology. We didn't need to ban typewriters. We didn't need to fight typewriter factories. We just made typewriters obsolete. And Bitcoin has made central banks obsolete because it is infinitely better money. And the reason for that is quite simple. Bitcoin holds value, other monies lose it. When Professor Reinhardt concluded her remarks, he said, well, we've heard this before. In the past, the dollar has depreciated, other currencies have appreciated against the dollar, but it didn't really work out in the long run. Yes, it's true. However, before Bitcoin, all of the alternatives were government monies, and they were all essentially backed by the dollar. They're all essentially, as I like to call fiat currencies that are not the dollar, I essentially call them, it's the dollar plus country risk. It's really no value added to the dollar. So the dollar is not going to lose to an inferior version of itself, because all of these fiat currencies are constantly being devalued and losing their value. Whereas with Bitcoin, it's a very different story, because Bitcoin holds its value, appreciates over time, and there's no mechanism for it to become more inflationary. If the German Deutschmark was going to become a replacement and threat to the dollar, the US government can saddle the Germans with a bunch of incompetent European governments that place fiscal strains on it and then make the mark unusable. Nobody can do that with Bitcoin. Nobody can find a way to make more Bitcoin. We're always going to be stuck with 21 million Bitcoin, and that just means that Bitcoin is going to hold its value and increase in value, whereas all the other forms of money are just going to decline. And this is what's been going on for 17 years of Bitcoin's existence. And really, all that Bitcoin needs to do over the next 17 years is have 1% of the growth rate that it has had over the past 17 years, and it will become larger in terms of capitalization than all of the world's fiat currencies combined, roughly. Bitcoin's already at about $1.8 trillion as an asset. Now, if you keep adding another 20-30% per year, which is, Bitcoin's done 70% a year over the last 10 years. Now, let's just say 10% per year over the next 15, 20 years, Bitcoin becomes larger than the treasuries market. It becomes the most liquid market in the world. It becomes the best asset in the world, and everybody will want to hold Bitcoin in that world. And Bitcoin is just going to appreciate more and more, and it's going to become the real economy. Whereas fiat governments and fiat currencies are going to increasingly lose and lose and lose value until they become an economically insignificant part of the world economy. In a sense, Bitcoin is a technological solution to a political and economic problem. Human ingenuity has finally found a way to free itself from inflation. Thank you very much.
네, 사이페린 아모스님의 발표 잘 들어봤습니다. 이제 발표 내용을 바탕으로 한양대학교 경영대학 파이낸스 경영학과 강형구 교수님과 함께 보다 심도 있는 대담을 진행해 보도록 하겠습니다. 두 분 무대 위로 모셨습니다. Now we're honored to have Professor Kang and Dr. Saipaden Amos.
Professor Amos, thank you very much for the exciting and thought-provoking presentation. Okay, I have a question. Okay, you are one of the foundational thinkers of the Bitcoin, and you view Bitcoin not just as a financial asset or technology, but also an institution or like system on which we can build a new global financial order, right? So, okay, so because you are in Korea, so in order to institutionalize Bitcoin in South Korea, what do you suggest and why?
Yeah, that's a great question. I think the reality of Bitcoin's rise can be a little counterintuitive in that if you try and impose policies against Bitcoin, if you try and put restrictions on Bitcoin, then you may be promoting it. And that might actually increase the need for people to want to use it. So generally, if you find yourself in a country where the government is talking about banning Bitcoin, that's the biggest signal that you should be buying Bitcoin. That's just the general answer in general. But I think here in Korea, Korea has maybe one of the most favorable regulatory frameworks for digital assets, which I think has helped make them quite popular in this country. I think the most important regulatory thing that can be done to help the advancement of Bitcoin would be to just stop putting capital gains tax on it. If you let people use it freely without capital gains tax, I believe it will naturally rise into the role of money. And even if you put capital gains tax, I don't think you can stop this fundamental process. It's just going to slow it down a little bit because people are making less gains from buying Bitcoin. But over time, Bitcoin is just going to continue to appreciate. And I think it's ultimately, money is a good of liquidity. You want the money that has the largest liquidity. And the reason that gold became money in the first place is not because a central bank made it gold. It's not because a government decreed it. Gold has been money before all of the world's governments existed. and it has outlived all of the world's governments that have died, and it continues whether they accept it or not. The reason gold became money is that it developed the largest cash balances in the world. And the reason it developed the largest cash balances in the world is because its supply is very, very conservative in its increase. It increases at about 1.5% to 2% per year. So it's the least inflationary commodity, and that makes it naturally money. And I believe that same thing is going to happen with Bitcoin. And so I think any government that wants to win the future and wants to have a long-term perspective on things will not focus on the short-term impact of whatever disruptive issues can happen from Bitcoin. You're not going to want to protect the typewriter industry by destroying the computer industry. I think this is the dangerous thing that governments fall into right now. You need to understand that the potential of the computer is so enormous that it makes it better even for the typewriter owners to have typewriters replace computers. And I think this is the lesson that the governments should think about when thinking of Bitcoin.
Okay, in the long run, maybe Bitcoin would win, but in the short-term or mid-term future, okay, there are many possibilities. As you know, the dollar country, dollar center, the system is in many. There are people believe there are some challenges to dollar center the system. So, what is your prediction for the short or mid-term future? And then, depending on scenario, what could Korea can do?
Yeah, I think in the short term, I don't see things as being fundamentally different in terms of Bitcoin. It's just constantly doing the same thing, which is that it increases at a low supply growth rate, and then more and more people hear about it, and it continues to perform without breaking down. It's been 17 years where it finds a new block every 10 minutes, almost without fail. And there's some variation in the time it takes to find a block, but it's just been operating, and it's pretty incredible. I think one of the important things to understand how Bitcoin is to just hear all of the politicians and the economists and bankers and people getting on TV and saying why Bitcoin can't work, why it won't work, why it's bad, why it's used by criminals, why it's only useful for money laundering or whatever, and yet it continues to operate, and it continues to churn out a block every 10 minutes, whether you like it or not. And I think this predictability, the fact that it continues to operate, and the fact that its monetary policy is completely unaltered, that nobody has been able to find a way to make more than 21 million Bitcoin, I think these are just salient facts, and once you recognize them and you think about the implications, you realize, okay, I'm short Bitcoin. I need to be holding Bitcoin instead of whatever garbage financial assets I'm currently holding. And so it's only a matter of time before more and more people realize it, and the more they realize it, the more the price goes up. So this has been a steady process of 17 years, and this is, I think, the real challenge that Bitcoin poses. A lot of the economists continue to dismiss Bitcoin, thinking, well, it's just a bubble. You know, we've had bubbles in Beanie Babies. We didn't build a global financial system based on Beanie Babies. But with Bitcoin, it's different, because it's not Beanie Babies. It's an actual financial system, as you said. It's got a complete system for settling more than 500,000 transactions globally. You could send $1 billion settled in an hour, roughly, for 5 cents, as it currently stands, anywhere in the world without anybody even knowing that you sent them. It's actually remarkable. So this, I believe, is just going to continue to amplify over the coming years. And I think we may at some point witness a turning point, an inflection point, where something geopolitical happens or economic, where the dollar is massively undermined, and people then have to resort to Bitcoin out of necessity because they want to make international payments, perhaps rather than out of speculation. And I think at that point we might witness, the inflection point in the S curve, as they say it, is when we go vertical in terms of adoption. When you get into Bitcoin, when you first understand it, you think this is going to happen next week. But then over time, you study it more and you think about it more and you realize, okay, maybe it's going to take a while. So I don't have clear timeline predictions on how and where this happens. But I think the process and the trend is very clear, unmistakable. And I struggle to see a way in which it can be stopped. And I struggle to see someone articulate a way in which this process of monetization that has been taking place for 17 years can be stopped.
Okay, Professor Amos, you are from the birthplace of human civilization. and then the bond contract is a tale as old as time.
I'm sorry, I didn't hear that.
The bond contract, the debt, that bond contract is a tale as old as time, like a human civilization. So it is possibly older than the fiat money itself. Actually, let me focus on the financing war with the fiat money. That is very refreshing perspective, basically. But the thing is that about 300 years ago, maybe first the Venice issued a bond to build a naval force to fight against Byzantine Empire. And then England, England also they used government debt to finance war against France. So that was before fiat money and very old. So even if we take Bitcoin standard, the Bitcoin standard, still we may not solve that kind of problem. Okay, how do you think?
Yeah, so I think, as an economist, I like to think marginally. I'd like to think not in terms of absolutes. It's not as if, we're going to press a button and then all war will end. I think there's a clear difference. If you look at wars before the 20th century on the gold standard, and you compare them to wars on the 20th century under the fiat standard, there is a clear difference in financing war. Yes, governments could issue bonds before, but how did they pay back those bonds? Taxation. They had to collect taxes. And taxes had to be collected in gold because they couldn't print gold. And so that meant a much higher degree of fiscal responsibility was required in that world than is required today. At no point in the discussion of the war in Iraq or the war in Iran has anyone in the US ever brought the question of the cost of the war into serious discussion. Only years into the war in Iraq, after it became clear that the initial estimate by neocons of, maybe $0 or $1 billion, or this is going to pay for itself, when that became clearly fake, and then it turned out that the war cost $8 trillion, only then did people start to talk about it. So only after the bill comes, it's, you order the war and you're lied to and told that it's going to cost you anything because it's okay, because we have a money printer, it doesn't matter. And then the bill arrives years later through financial crises and inflation. Not many people draw the connection between the Iraq war and the US financial crisis in 2008, but it is a very obvious connection because the inflation that led to that financial crisis, a big part of it was to finance the massacre of the Iraqis by the American government. So these are highly related, and I think under a gold standard you'd get a lot of this. Now, it's a more complicated argument that I make in more detail in my second book, The Fiat Standard, and in Principles of Economics, my third book. But I would say that, so if we go back to gold, we would have less war financing, and war would be a lot more, or governments would be a lot more responsible about how they fought wars, and they'd be a lot more careful about their resources. But I would even go further and say that a Bitcoin standard would be a lot more conservative than even a gold standard. And the reason for that ultimately comes down to the fact that under a gold standard, because gold was centralized, still governments could get away with a significant amount of inflation. In 1914, when World War I started, the amount of gold that was held at the Bank of England was only sufficient to cover 31% of the value of British pounds outstanding. So already in 1914, we were already effectively on a fiat standard. Yes, gold was redeemable at the Bank of England. The pound was redeemable for gold at the Bank of England. But the majority of pounds were spread out all over the world, and they weren't going to all go back and ask for redemption at the same date. That's because it's very expensive. If you were an Indian bank and you had a bunch of British pounds, it was good that you had them. But if you wanted to withdraw them and take gold custody, well, it's months to send the paper to London and then send the gold back. And so it's extremely expensive, and it's extremely unlikely to happen, and therefore that allows the central bank to engage in a lot of inflation. And that's why World War I effectively started on the gold standard, because central banks had that ability. I think Bitcoin takes that away, because it makes the transaction that you need to redeem your money for the hard asset, which is gold or Bitcoin, it makes it a lot cheaper. So currently, if you're in India and you want to redeem Bitcoin from your bank in Britain, it costs maybe 10 cents and about a couple of hours. If you wanted to redeem gold, it costs thousands and thousands of dollars and several days to be able to, or maybe weeks or months, You know, when France recently asked, or Germany, to repatriate some of their gold from New York, it took months to move it to Germany. And when France tried to do the same thing, they just decided, okay, we're not going to move it. We're going to sell it in the US and we're going to buy new gold in France or London. So I think the key thing is the salability across space, as I describe it in fiat. It's the ability of the money to be sold quickly so that people can move in and out of the money before their government can impose inflation on them. And that's why I believe that a Bitcoin standard will be even more crippling of government finances, which is a blessing for humanity. It's really going to be the solution to the major problem that humanity has had for the past century or so.
Okay, I like your argument. Very interesting. But the thing is that Korea is a bit special. It is in geopolitically tension, a lot of geopolitically like sensitive place in South Korea. So just in case, we may issue war bond. We may have to issue bond or use fiat system to finance war or very extreme situations. Okay. In that case, maybe because we have to prepare that kind of situation always because we are Korean, so we have challenges to accepting the Bitcoin standard per your recommendation. How do you think?
Yeah, well, I think the idea that inflation helps a government finance national defense is a complete fallacy. And it's built on the ultimate Keynesian fallacy, which is that a money printer can create actual resources. But that's not true. If you print more money, you're not creating more resources. You're not making more weapons. You're not making more capital goods. The amount of capital goods that exist in Korea today, right now, is not going to change if the central bank goes and prints 1 trillion won in this minute, right? We still have the same exact amount of machines. And all that happens when you create more money is that you reallocate the resources. The people who get those trillion wons now can go out and buy a lot of capital. Is that creating new capital? No. It's redistributing the capital. So I think this is really one of the fundamental economic fallacies of the entire fiat century, which is that once we get the money into the hands of the government, then we can have a free lunch. Oh, you want to fight a war? Then it doesn't matter. We just print a bunch of money. Nothing happens. We go, we fight the war. 5 years later, there's an inflation and a financial crisis. Oh, well, that's because of reasons. That has nothing to do with us printing all of the money. So if you recognize that this is a fallacy, if you recognize that you can't actually create resources from nothing, if you recognize that a money printer making more money is just devaluing the money, it's not increasing the value of capital goods or increasing the productivity of capital goods, then you realize that inflation is not a way to finance war. If you have a war and you want to move resources, the resources are already there. Printing money is not going to increase the resources. It's a question of mobilizing the resources. And you can mobilize resources by physically capturing them. If you were a government, you just go and take a factory and use it to produce weapons. Or you can mobilize resources by taxing people, take money from people directly. We need $1,000 from each household to fight the war. And if people feel like this is a serious threat, they will do it. And if they don't feel like it's a serious threat and they don't want to pay the $1,000, good. Maybe that isn't the war that they need to be fighting. Maybe Americans don't need to pay $8 trillion to bring democracy to Iraq or whatever it is that Bibi Netanyahu is telling them. Maybe they shouldn't. Maybe the fact that the government can't finance these wars is a good thing. And that's it. That's the answer. The answer is if it was a real war and South Korea really needed resources to fight a real war, then South Korea will be able to get its people to mobilize their resources without a problem. But if it's a war of aggression that is going to cost South Koreans money, that brings them no benefit, but only helps maybe the government or some people connected to the government, then yeah, it's good that the government can't print money and send people to war. I think governments, I think war should be something that is extremely difficult to engage in. It has to really win the approval of people, and that can only be expressed not through voting, because you saw, the majority of Americans opposed Iran, and they voted for the con artist Trump because he said that he was going to not fight the war on Iran, and then look how that worked out. So it needs to be financial. It needs to, if the American government had to pay for its war up front, it would have had to tell people how much the war would cost. And that would be the kind of honest accounting that Bitcoin would bring. And if that cripples governments from fighting wars, that's a good thing. That's not a bad thing.
Fascinating. Okay. About 20 years ago, I was at Lehman Brothers. It didn't end well, of course. Okay, just in case, let's assume we are again in the financial crisis again because of the bubble burst, which may resulted from fiat currency, possibly. Okay, suppose we are in another financial crisis and then asset prices go down. Then many financial institutions should deleverage. There are two ways of deleveraging: sell asset. But if we sell asset, that will create vicious cycle. It would be a fire sale, and in macroeconomics term, it will deepen the crisis. Another one is to increase equity, but increasing equity is quite sticky. It is not always easy. Then, because at the time, 20 years ago, because we have fiat money, so fiat money, well, we can create fiat money, and then we can inject the fiat money to the equity side, so we can do deleveraging and we can get over financial crisis. So in some sense, elastic fiat money system is elastic, so which can be useful in financial crisis. On the other hand, Bitcoin, as you mentioned, it is mechanically determined. Total supply is mechanically determined, so it is not elastic, which can be a burden or liability in the financial crisis. So we need a risk management system. If we take the Bitcoin standard, how do you think?
Well, I think this is a little bit like saying quitting alcohol is not a good way of fighting a hangover, because if you have a hangover, you need to drink to get over the hangover. It gets over your withdrawal. And so therefore, how do you fight hangovers if you don't drink? And the answer is, if you don't drink, you don't get hangovers in the first place. So the problems of finance, the problems of financial crises, I believe, are fundamentally a product of the fact that the money is elastic. The money is broken. Fiat money is fundamentally broken because its supply is constantly being manipulated by central banks. And that makes it dysfunctional as money. And that dysfunction manifests in all of these financial crises, which the priests of inflation don't like to link to inflation. So it's always imbalances and weird abstract nouns that cause crises, animal spirits or global rebalancing or something like that. All of these abstract nouns are the causes of financial crises that are actually caused by inflation. And I get into this in more detail in my work, and I'd urge people to look into the Austrian school and their explanations of inflation and the implications of inflation. But the short answer is this: if the government can't increase the money supply and it can't manipulate the money supply, then whatever financial crises we're going to get are essentially going to be individual and not systemic. So a bank might engage in fraud, a bank might lose its business, a bank might make a very bad investment, a bank might be ruined because an earthquake happened, and then everybody who's dealing with this bank is going to take a haircut. But it's not going to be something systematic, because nobody is going to destroy the currency in order to bail out that bank. And that's what the moral hazard at the heart of fiat money is that ultimately, having a money printer means that banks and people who are connected to centers of power are very, very, very welcome to make extremely disastrous mistakes, because those disastrous mistakes are highly lucrative. And generally, when you find people repeatedly making the same kind of extremely stupid mistake that happens to be extremely lucrative for them every time they make it, maybe it's time to assume that maybe it's not a mistake. Maybe it's a feature, not a bug. Because it's great if you're working in the banking system. The more inflation you engage in, the more you destroy the currency, the more risk you take, the more profit you take. However, that takes on more risk, which then can lead to a crisis. But it's okay, because you have a central bank whose job is to prevent crisis. It's out there to protect you from the consequences of your actions. And why can it engage in such reckless behavior? Because it has a money printer. Get rid of the money printer. Central bank can't bail out banks. All the banks that try stupid things and that try fraudulent things and that try inflationary things, they go out of business and nobody can save them. So what does that do? Within a few years, we're going to have a very, very, very robust banking system in which people don't take crazy risks, in which people are very careful because they realize if you lose your money, you lose your money. There are no do-overs. Bitcoin is money for adults. It's for grown-ups. Fiat is money for children. It's Play-Doh money. It's fake. It's all lines in the sand. Oh, you lost $70 billion because you didn't do right risk management? That's okay. You're systemic. Here's another $70 billion. Go and play again. It's children's money. It's not real money, but Bitcoin is real money. And that's why we're going to have fiscal and monetary responsibility on Bitcoin and not on fiat.
I have several interesting questions from the audience. Okay, one of them is, the question is from Kim Ja-gyum-nim. The question is, Bitcoin is volatile asset.
I'm sorry?
Bitcoin is volatile. Bitcoin prices is volatile. It fluctuates a lot. So because of the volatility, is it really feasible to use it as a key currency? Okay, how did
Not currently, but I think the interesting question here is, why is it volatile? And how can we imagine that volatility going away? And in fact, if you look historically, the volatility has been declining. We have 17 years of data and we see a clear trend in this decline in volatility. And I think there's a clear way of understanding why volatility exists. Volatility exists because Bitcoin is still a small asset. It's only $1.8 trillion. And so if Elon Musk wakes up tomorrow and says, I want to buy $10 billion worth of Bitcoin, that's going to be a big deal. That's huge compared to the size of the Bitcoin market. And it's going to affect a lot of people going in and out of the Bitcoin market. If he wakes up the next week and says, you know what, I don't believe in this Bitcoin thing anymore, I'm going to sell my Bitcoin, that's going to cause volatility in the price. So clearly, the volatility is suboptimal. And if anybody has a way of designing a Bitcoin that appreciates as quickly as Bitcoin appreciates without the volatility, making the appreciation perfectly predictable, you know, we just do 20% a year and that's it, and it goes up in a straight line, please go ahead and do it. But currently, we don't have that option, and there is no way of doing it, as far as I can tell. And I think there are very good technological and technical reasons for why such an intervention is not feasible in the first place. So then we're left with the real choices. We're not here in an academic setting where we're discussing how we would like our actual choices to be. We have real choices in the world. We have Bitcoin, which appreciates enormously in the long term, but is highly volatile in the short term. And then we have fiat, which depreciates in the long term, but appears to be stable in the short term. So it's really, I think, a question of mentality, a question of time horizon, and a question of intelligence. Which one would you rather have? Would you rather lose all of your money steadily, or would you rather gain value with some volatility? I think the answer is very clear. And I think, you know, of course, the volatility right now reduces the amount of exposure that people can have to Bitcoin. So if you get into Bitcoin today and you learn about Bitcoin today, you probably shouldn't go all in to Bitcoin because of the volatility. It can work out well because Bitcoin can just shoot up afterwards, but most likely, for most people, if you get in today, there's going to be some volatility, and it can be very dangerous. If Bitcoin drops 50%, which is done before, then you go all in, you lose 50%, you have to sell a few months later because you need to meet some bills. So now you are in a position where you have to sell at a loss. So you want to manage your exposure. I think this is why essentially the process is taking longer, because we need to manage the exposure of getting in. But I still believe the process is essentially inevitable, because as people get in, the value goes up, and as it goes up, as the size of the Bitcoin market and the size of Bitcoin liquidity increases, the volatility declines. So right now, Elon Musk can move the price of Bitcoin, but in 5-10 years, he won't. And even if he announces that he wants to buy or sell, it's not going to make a difference. Bitcoin is going to be much larger. It'll be governments that can move the price then. But then another 5-10 years, governments won't be able to do it. So think of it this way. If Bitcoin becomes a $100 trillion market, in terms of capitalization, that would make it larger than the US Treasury market, larger than all fiat currencies combined. If that were the case, then the volatility will disappear. And the evidence that I would provide for that is look at gold. How did gold lose its volatility? How did gold become so remarkably, I wouldn't say stable, but not unstable, in that it's maintained its value very well over the many decades and centuries, and millennia even. And that's not because there was a central bank that was managing the gold supply. Anyone can mine gold, anyone can sell gold, anyone can buy gold. Why did it become so stable relatively to all other assets? Why has it held on to its value so well for centuries and millennia? We look at prices of goods under the Romans in terms of gold, and they haven't changed much since today. Wheat has barely changed in terms of gold over thousands of years. How did it maintain that stability? It's not because somebody was managing the supply. It's because the supply was growing at the lowest rate, which made its value increase, which made its pool of capital increase, which made it the most liquid good, which made it the money, which made the variation in its prices due to individual transactions become smaller and smaller and smaller. Effectively, you can think of it as being the bid-ask spread. The more liquidity there is in a market, the smaller the bid-ask spread. And the smaller the bid-ask spread for an asset, the more suitable it is as a money. So, Bitcoin is still not big enough and suitable enough and stable enough for it to be used as the world's money. It'll need to do another 10, 20, 30, 40x before we get to that. Until then, this is the opportunity. Until then, you're getting to buy Bitcoin essentially like a startup seed capital. You're investing in Uber when it was 5 guys in a basement with the idea that one day this is going to replace most of the world's taxis and that's an enormous market. Right now, Bitcoin hasn't replaced the globe's central banks, but that's the business idea. That's the startup idea here. By buying into Bitcoin, you're essentially buying into shares of the alternative monetary system that's going to replace central banks. And it's a bet that 50 years from now, or 5 years from now, or 10 years from now, this monetary system will be larger than what it is now. And it's a bet that has panned out for everybody who's taken it so far, and I expect it to continue to pan out. Because unless you can figure out a way to make more Bitcoin than the 21 million, then this is just inevitable. We're going to be making more dollars, more euros, more yuans, more everything. Everything's going to be created in larger quantities. Everything is going to be inflated in supply. There will be more treasury bonds. There will be more corporate bonds. There will be more stocks. There will be more of everything. Everything's going to be created in increasing quantities. And the one thing that we can't make more of is Bitcoin. And that makes it necessarily the best money. You may not like it, but eventually you're going to have to accept it.
Okay, another interesting question from the audience. 이창현 님. Okay, the question is, okay, I think everyone would agree that whether they agree with you or not, many people think that current global financial system needs serious upgrade, of course. Okay, but
Sorry, I didn't quite.
Current financial system, global financial system needs upgrade.
Okay.
Yeah, serious upgrade. But thing is that in order for Bitcoin or any other to become an alternative, it needs trust. Because as you wrote in your first book, where Bitcoin is institution and money is also social device. It is basically social coordination mechanism, and then network effect should work. I use, then the other people use. The other people use, then I will use. So that kind of network system should work, and for the system to work, we need trust in the system. So some people believe that Bitcoin needs to build more trust to become an alternative. So, okay, in order to do that, what is your recommendation? And what is your view?
I think this is similar to when cars arrived at isolated areas, and initially, can you imagine when my great-grandfather or your great-grandfather, when they first saw a car for the first time in their life, they must have thought, this is crazy, there must be some ghosts inside it, there must be some monsters inside it, how does this thing move, where are the horses, who's hiding the horses? And the answer is people need to just see more cars and get into cars and see that there are no magic horses, there are no ghosts, there's no, you just put a bit of fuel and it works, it's a mechanical machine. And eventually people are able to catch on. You see a bike, you figure out how it works, you start riding a bike. You see a car, you figure it out, you see a computer, you figure it out. And Bitcoin is like that. And that's really when people say trust, it's not about trusting it, it's about understanding it. You don't trust a bicycle, you just understand that if this thing is constructed properly, then if I press my foot here, then the thing will move forward. It's a mechanical process. And with Bitcoin, I think a good metaphor to understand what Bitcoin does to money and banking is to think about telephones. Back in the day, I'm old enough to remember when I was a kid, there was a time when if you wanted to call somebody, you didn't just press the numbers on the phone. You lifted the phone, and then the guy at the central central station, he would talk to you, and you tell him, I want to talk to that person. And then he would take a wire, connect it to your house, and connect it to his house, and then put you two together, and then the two of you can talk. And of course, he can listen in if he wants to. And this, I think, is a great metaphor for modern central banks. We actually have human beings sitting in rooms and deciding whether this person can pay that person or that person cannot pay that person. And they decide how much money should exist, which in 100 years from now, people are going to look at this as being insane. Like, why do we need somebody to sit in an office and tell us we need this much money? Any quantity of money is enough. The value of money changes to accommodate whatever demand exists. You don't need to increase the supply. So the notion that we need to trust in people to manage the money and in order to manage the bank is a function of inferior technology. Just like we needed at a certain point to trust in people to connect the wires for us to call each other, eventually we found a way, technological way, where you just press a bunch of buttons on the phone and then that connects you directly to the other guy. Over time, any technological invention that saves human time is going to succeed. You know, if you asked people, hey, you can get into the car, which is a little bit faster than a horse, but it can blow up and you will die in a fire, you would think nobody's going to want to do that, right? But when a car is available, a car can save you time, people will take the risk of dying in a horrible fire if it saves them time. So that's why it doesn't matter whether people trust or don't trust or what they think about whether we need to keep the guy and the telephone operator in a business, whether we need to protect the jobs of the telephone operators, whether the telephone operator is a geopolitically important national security job, doesn't matter. It's going to be replaced by buttons and mechanical processes because it's infinitely more efficient. And similarly to central banks. People, I think what people need to do to trust Bitcoin is to just continue to open their eyes and look at how manual money is managed by central banks and what it does, and then look at how automatic, technologically advanced money is managed, which is Bitcoin, which has a fixed supply, which nobody can change, which nobody can control, nobody can manipulate, and essentially you don't need to trust anybody. The whole point of Bitcoin is that it's, you know, the slogan that Bitcoin is always used is verify, don't trust. Doesn't matter what you trust. You run the entire code base of Bitcoin on your own computer, and that allows you to see every single Satoshi, every single tiny fraction of a Bitcoin, where it exists, who holds it, and how they're trading it with one another. And you don't need to trust in anybody. You can verify the entire code, which is not the same thing as with government money. Who here knows how the central bank actually works? Most people in the central bank don't quite understand how the central bank works. I'm pretty sure nobody could build a central bank from scratch if they tried to. A lot of people can build a Bitcoin node from scratch. They know how, because the code is all transparent. So I think in retrospect, the technological gap is going to look so large. And I think people are, you know, the only question is why did it take people so long to upgrade from Bitcoin, from fiat to Bitcoin? And I think the answer is simply that the volatility and the government propaganda. Government does a great job of trying to tell people we need inflation, we need inflation, we need inflation, we need inflation. It's going to take a while for people to get over that. And but you know, the good thing about Bitcoin is that it doesn't need PR. It just has what we call number go up. The value goes up, and the price is available for everyone to check, and people can see that the price keeps going up. You can remain obstinate and stubborn about it for as long as you want, but you know, if you don't want to be poor, you need to accept reality.
Okay, another question. Okay, this question is from Yoon Hyung-jun from LGU+. Okay, the question, I'll read the question, it is written in English. So, comparing Bitcoin's adoption to gunpowder rather than the iPhone is the most pivotal game theoretic insight presented in the Bitcoin standard, and then I completely agree with it. My question is, regarding the catalyst for the explosive transition to Bitcoin standard, do you believe this transition will be triggered top-down, driven by macro triggers such as the dollar hegemon, accumulating Bitcoin as a reserve asset, or through geopolitical crisis, or will it emerge bottom-up, like crossing a critical threshold as the masses naturally adopt it to escape inflation and reclaim financial sovereignty?
Yeah, it's a very good question. I think if you asked me when I wrote the Bitcoin standard, I would have said that Bitcoin will emerge organically bottoms up. People will hold Bitcoin, and the value of Bitcoin will appreciate, and people who hold other assets will witness those assets go away. And so we'll have a much more spontaneous emergence. Over the last 8 years since I wrote the book, I would say there has been more official and institutional and state adoption than I would have expected, and there has been probably less widespread adoption among people than I would have expected. So I probably tend more, I mean, I would say I think the possibility of top-down adoption is probably more likely than I used to view it in the past. But I struggle to really choose between the two because it's very difficult to think how this will map out. So one way it can map out is that we could just continue with this gradual process, which most people don't notice, most people don't understand, most economists don't notice. But it is a true shift in that, it's only $1.6 trillion in Bitcoin right now. But if this continues, then Bitcoin is going to be serious money. A trillion here, a trillion there. Eventually, it's a very, very big financial asset. So we could just continue with this, but I think there may be some kind of geopolitical turning point, and it may come at a point. It may come as a result of, say, a collapse in the value of the dollar, a massive decline in the value of the dollar, that forces people to, or forces some large institutions to think seriously about an alternative, and some of them arrive at Bitcoin, and that can be a major tipping point. But I don't have a crystal ball, so I don't know. I think my base case scenario is we're just going to continue at around 20, 30, 40% per year for the next 10, 20 years, and that means Bitcoin dominates by 20 years and it becomes the world's money in 20 years or so. But I'm very open to the possibility that somewhere along the line there will be massive kicks upward where we go through a very fast phase of adoption because a government adopts it, or because a large financial institution uses it, or because a payment system is built around it, or something like that.
You're heavily influenced by Austrian school, and then as far as I know, Austrian school highlight the productive use of money. They highlight the real economy always, right? And then current Korean government, one of their interest is, one of their problem is how to make Korean financial system more productive, more contributing to the real economy. Do you have any suggestion, especially in connection to the crypto and Bitcoin?
I think the best way to make the financial system more efficient is to kill inflation. I think the best thing that you could do in Korea is to just wake up and say, all right, no more wons will ever be printed. Break the money printer and keep the supply of wons fixed. I think the next thing that will happen, what will happen the next day, is that the value of the won will probably double. Remember in Iraq in 2003, when the US military bombed the Iraqi central bank, what did that do to the Iraqi dinar? Does anybody know? It doubled in value overnight. It was about 5,000 Iraqi dinars per US dollar. Once the central bank was bombed, it dropped to 2,500. Why? Because if you kill the central bank, you can't make more money. So that increases the value of the money. So I think, my advice to any government is shut down your central bank, or at the very least, make it just a mechanism for processing payments and take away its ability to create money. Keep the fixed money supply that you have, don't increase the supply, and let the people and the banks just scrap for this money, and which will increase its value. It'll make everybody in the country richer. But this is the kind of more general advice. But in terms of Bitcoin, I think the real correct approach for Bitcoin, whether you're an individual or an institution or a government, is to build your cash balances conservatively, but as quickly as you can. So don't expose yourself to too much volatility. Don't put yourself in a position where you could be destroyed by a 30, 40, 50% drawdown in Bitcoin. If a 50 or 70, 80% drawdown in Bitcoin can destroy your business or destroy your finances as an individual, then you're over allocated. Reduce your allocation to Bitcoin and wait until it grows through the appreciation of Bitcoin until you're able to have a bigger and bigger position, so that even an 80% drawdown doesn't hurt you. So accumulate larger reserves, and that is going to protect you, whether you're a Korean individual, whether you're a Korean business, or you're a Korean central bank. If you're a Korean central bank, you're now looking at the US treasuries that you're holding, and think about all the risks. I mean, really, the US Treasury, people call it risk-free, and I think it's hilarious because the US Treasury is just the accumulation of all the world's biggest risks. It's already lost 50% in terms of dollars over the last 5 years or so, and the dollar's lost something like 20% of its real value over those 5 years, conservatively. So basically, government bonds are just a terrible, terrible, terrible investment. And that's what most central banks hold. That's what most sovereign wealth funds hold. So if you care about the future of Koreans, then you don't want to be holding things that are designed to rob them. You want to be holding things that are designed to hold on to their value. And so I would suggest, whether it's the central bank, the central government, regional governments, provincial governments, cities, everybody, build your Bitcoin cash balance, because everything else is going to be destroyed, and everything else is highly vulnerable. On top of all the financial risks associated with treasuries, there's also the other more important risk now happening, which is the politicization of them. It was the Biden administration that was froze the Russian bank holdings. They also froze Afghanistani bank holdings. And, that was Biden. Now imagine with Trump and with his, how shall we put it, activist way of approaching the presidency. It's not too difficult to imagine that tomorrow you get a new tweet from Trump saying, oh, the Koreans are negotiating with the Iranians about passage of that we're just going to take all of their treasuries. I mean, it's a really serious risk. And the more inflationary the US becomes, the more the treasuries are risky as a financial asset, but also the more they're risky as a political asset. Because the US is essentially lashing out like a bankrupt power, because it's losing power, it's losing influence, it's losing money, and its money is, and its fiscal and monetary position are terrible. It needs to prey on something, and that something might be you. So you want to diversify away from these kind of US dollar-based financial systems. I think that's, everybody is over-allocated to dollars. No matter how much dollars you have, you are probably over-allocated. And I think that really is the most consequential long-term position that you could move. You don't have to dump all of your treasuries today, but if you start building a small Bitcoin position today, in 10 years' time, the Bitcoin position could be significant enough that it will allow a significant amount of political freedom for the Korean government to be able to conduct its foreign policy as it sees fit without having to be held hostage to the Americans.
Okay, our time is up, but I want to take one question from floor. Do you have any question? Anyone?
Over
Yes.
there. Please give him a microphone.
Hello, my name is Kyle. I'm from one of the largest crypto central exchange called Coin1. First of all, thank you so much for your speed. As a Bitcoin maxi myself, I could not agree more on everything you said. So I have a question that's kind of paradoxical to the Bitcoin concept, and this is something that I couldn't solve myself. So do you see any possibility of Bitcoin being the most powerful surveillance and censorship platform because of its transparency? So I joined this industry because of the concept of decentralization of censor-freeness, of course. But ironically, blockchain is exposed to everybody. And you would think that government would hate blockchain because they would not be able to control. However, the information is spread and is exposed to everybody. And as the blockchain and Bitcoin and cryptocurrency becomes more huge part of the traditional finances, I would assume that majority of the wallet addresses will be KYC'd, and many countries will execute travel rules, right? And even though they cannot block the transactions right away, I believe they still can label one of certain transactions or funds as illicit if they want to. And if none of the compliant exchanges or institutions would allow or take those funds as is tainted, right? They can obviously have a very effective censorship on those if they're able to block all the on and off channels. So in that sense, do you think there's any possibility that blockchain can actually become more powerful surveillance system that any traditional finance systems has ever seen before?
Yeah, I think that's a very good question. I think, initially, if you read some of the early Bitcoiners, some of the early promotional material that people built for Bitcoin, a lot of it was based on the idea that Bitcoin was free, instant, and anonymous. And I think those three things have not survived the test of time. Initially, transactions on Bitcoin were free because you didn't have to pay transaction fees because the miners were making enough money from the rewards. And so a lot of people promoted Bitcoin as free. And then they said instant, because yes, it does show up in your wallet instantly when somebody sends you money, but no, you need some confirmations and you can't take money without confirmation. So it's at least 10, 20 minutes to get the first confirmation, but you should probably wait for more. So it's more like an hour. So Bitcoin is not free, it's not instant. And the third one was anonymity. And I think a lot of Bitcoiners imagined that this would be the case because there's no form of identity on the Bitcoin blockchain. There's no KYC for Bitcoin. You don't need to upload your passport onto a computer in order to get Bitcoin. And so people assume that we're just going to get this massive economy, grow around addresses, and nobody will be able to know what those addresses are. But over time, that's also proven to be mistaken. And I think in retrospect, it kind of makes sense. You do have a record of transaction. All that Bitcoin does, all that you do when you download the Bitcoin software is download the record of all the transactions. Every single Satoshi that has ever existed, it's every single transaction that it's had. So you have a full record of every transaction that has taken place. And then I think perhaps the thing that the early Bitcoiners didn't appreciate was just how much money was going to come into Bitcoin from KYC. And this is something that was very surprising for me. When I first heard about Bitcoin, it was I think maybe 2011 or 2012, 2013, there wasn't a lot of material about Bitcoin, but I immediately assumed this was going to be something criminalized. They're going to lock those people up and put them in Guantanamo. And it's, I wouldn't dare send my information to a Bitcoin exchange because I wouldn't want my name to be associated with Bitcoin in any way. And that turned out to be the most expensive mistake of my life because I could have bought Bitcoin at like $1 and less than $1 and $5 and $10. But I thought, no, if I buy it, they're going to throw me in jail. And if I buy it, they're going to link it to my identity. And then around 2013, 14, 15, 16, you start realizing, well, hang on a second, everybody's got money on an exchange and it's linked to their identity. And then chain analysis companies emerge whose job it is to link addresses to identities. And now they claim at this point that something like 80, 90% of the coins, they're able to identify the ownership of them. And I think that's probably a reasonable estimate. I don't have my own estimates, but I think that's probably reasonable just because think about the way that Bitcoin works. As it currently stands, the vast majority of people get their Bitcoin from KYC sources. So then we know that this Bitcoin is yours. Now, you may go ahead and spend that Bitcoin, but then there are ways of figuring out where you spent it because more and more addresses are getting de-anonymized. And so more and more of the transactions are being linked. And I think, with AI and powerful data analytics tools, they're only going to get stronger. And the record of transaction is only going to stay there. It's not going to get forgotten. We're not going to, 5 years later, we just erase all the record of the earlier transactions. It's all there, and it's always going to be there. And we're only going to de-anonymize more and more and more addresses with time as we figure out more and more information about it. So I think the idea of anonymity on Bitcoin on-chain is likely massively overstated. And what I always say is, if you're a criminal, stick to the US dollar. It's the criminal tried and tested currency of choice. The real criminals use US dollars. If you want to buy some weed from somebody, maybe you'd use Bitcoin, but I really wouldn't even advise it for anything because you're leaving a permanent record. So if you're committing a crime, you're leaving a permanent record of that crime on thousands of computers around the world. That's a terrible way to do crime. Now, I'm not a criminal myself, but I presume in criminal school they'll teach you don't leave a record on thousands of computers around the world if you want to commit a crime. And all of the talk about Bitcoin being for a crime is, I think, massively overblown because of this. We have some small-time weed sellers who were buying and selling weed with Bitcoin. A lot of them got caught and got thrown in jail. But the serious crime, the serious criminal activity, it doesn't work with Bitcoin. If you want serious criminal activity, you want to be in the fiat system. In fact, you want to have your own bank. That's really how the pros do it. You own JP Morgan, you own HSBC, that's where the cartels go. That's where the massive money goes. You want to have your own bank because when you have your own bank, you can create your own money. And that's how you get away with crime. You create your own money, you make fake loans, you destroy the loans, you pay them off. That's how these pros operate. And you can't do any of that on Bitcoin. So I think we're heading toward a world in which more and more of the on-chain Bitcoin is identified. However, we're going to probably be able to develop more privacy solutions on Lightning, which already exist, and a lot of people use them, and a lot of people are able to operate on Lightning with an enormous amount of anonymity. But it requires some technical competence. I think over time it's going to be more and more and more accessible. But I like this idea. I like the idea that the Bitcoin on-chain is traceable, because I imagine that Bitcoin on-chain, as I described in the Bitcoin standard, Bitcoin does on-chain, the basic capacity is 500,000 transactions. Maybe we can push it to 1 million or 2 million, which is not enough for a small neighborhood in Seoul, maybe, or half of Seoul per day. Seoul has many more transactions than 1 million in a day. So the whole world obviously is not going to do all of its transactions on these on-chain transactions on Bitcoin. I think you can think of Bitcoin transactions being equivalent to Fed wire transfer or large amounts of transfers between large financial institutions. And for that, you actually want transparency. You actually want to know every Satoshi and who owns it. So I think this is actually ideal. If governments and large financial institutions and central banks were the ones operating on-chain in Bitcoin, because they're the ones making large value transactions, whereas everybody else was using Lightning for their day-to-day transactions, then we'd be able to develop we'd be able to develop some degree of privacy, although it's a very complicated question in terms of Lightning and how much we can get to it. Difficult to say, but we probably will be able to have some margin for privacy. But then banks and governments won't have any margin for privacy because all of their transactions will be on-chain. And so you'll be able to hold them to account a lot better. Imagine if your government, instead of having a money printer where it can just make money whenever it wants, at whatever quantity it wants, imagine instead of that, it had all of its accounts public, and every cent that they send or every Satoshi that they send was actually transparent, and every citizen could see it. I think that's a good thing. It's turning the tables. Yes, it's not that it's going to give us anonymity. It's going to take anonymity away from government, and it's going to take anonymity away from the people who control money, who print money, and who essentially live off of devaluing the money of others.
Excellent. Let's call it an end. Okay. Please join me to thank Professor Saifeddin Amos for his interesting, exciting, and inspiring presentation and discussion.
Thank you very much. Appreciate it.
네, 발표와 토론을 진행해 주신 연사님들께 다시 한번 감사의 말씀 드리겠습니다. 그리고 질문을 해주신 윤형준, 이창현, 김자겸, 그리고 마지막으로 박기범님은 데스크에 가시면은 저희가 저자들의 이제 사인이 담긴 연사님들의 사인이 담긴 책을 드릴 거니까요. 꼭 챙겨가시기 바라겠습니다. 자, 이것으로 2016 세계 경제금융 컨퍼런스를 모두 마치겠습니다. 오늘 함께해 주신 연사님들과 참석자 여러분께 진심으로 감사의 말씀드리겠습니다. 달러 위안화, 코인, 글로벌 금융질서 재편이라는 주제 아래 급변하는 국제 금융 환경과 통화 질서의 변화에 대해 아주 깊이 있는 통찰을 나눌 수 있었던 뜻깊은 시간이었습니다. 오늘 논의된 내용들이 앞으로의 정책과 시장 그리고 우리의 대응 전략을 고민하는 데 있어 유익한 길잡이가 되길 바라는 마음입니다. 끝까지 함께해 주신 여러분 다시 한번 감사드리고요. 안전 귀가하시기 바라겠습니다. 감사합니다.